Click one wrong button and you done on the forex side. Oh, you didn't get your leverage right? You didn't get your lot size right? Okay.
And we're off, baby. We're off. All right, let's look at this, man. Let's look at this trade. I was in this trade for 12 freaking hours. I thought my break even almost got hit, but it didn't. I don't know if I should give this, if I should let it work or what, man. I don't know. I don't know if I should let this work or not. And these bulls are just bastards, man. They're bastards. You bulls are bastards. Let us bears get our fix, god damn it. Let us get our fix. Shit, we're addicted too.
Fix for us.
I know, right? We gotta sit here and take these bullish positions.
Tommy said, "Let it go." Let it go.
I wish I could quit you. I wish I could stop shorting the market. Look, see that golden zone from Friday still working. That golden zone from yesterday. Yo, that shit hit yesterday's golden zone perfectly. Yo, look at this, yo. That's so crazy. It's rejecting perfectly off the golden zone. Huh. It rejected perfectly off this golden zone from yesterday. Huh. And then we got the breakout from the golden zone from yesterday. Now, these golden zones are pretty cool. Huh.
Pretty cool.
What's up, Tommy? Hey, hold on. Did you hear that? You hear that?
What?
Smith, you didn't hear nothing?
All I hear is money, baby. I ain't hear nothing.
You didn't hear nothing? Oh, my bad. I thought I heard an ES trader says something. My bad. I thought an ES trader says something.
Oh man,
I know.
missed my opportunity.
Take
What up,
block.
Tommy?
Tech block. All we traders, all we know is Nasdaq, 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 Nasdaq. When New York opens, all we trade is Nasdaq. Oh crap.
Alright.
What's up, NYA? What's up? All right, looks like we're gonna get this breakout right here.
I joined in.
Well, there goes my short position. I was in 12 hours in. Rest in peace. Well, actually, no. I'm still in it. I'm still in it. I'm still up. There it goes. Rest in peace. I was in the move for 12 hours. You bastard bulls. You bastard bulls. You bulls are fucking bastards. Ah. Oh, that's so funny. All right, man. All right, so I mean, we got this range right here. We got somewhat of a breakout, but obviously we got price trading right back into the range. So we do got VWAP here at 726. If the bulls really want it, they're gonna bounce right off of 726 or somewhere in that area, and we can possibly see that move up to 800. You know, with pump and pow, anything is possible. With pump it pow, anything is possible.
Anything is possible.
And yeah, honestly, look at this. Look, we got a bull. This is a bull flag, guys. These trading patterns are actually really the truth. I'm gonna draw it out for you guys. I'm gonna draw it out. This is a bull flag. We got our flagpole, and we got our flag, and we have our breakout of that flag. Damn.
Yeah, bro. I hopped in. I didn't hesitate on it this time.
Yeah, I did.
I'll all that.
Ah, damn, I missed it.
Can
Well,
you get much higher?
looks like we're going to start trending. But guys, I want to show you. This is the fib levels from Friday, and this is the fib levels from yesterday. You see how it was rejecting perfectly off that, and now it's using that perfectly for a blast off. We could possibly see this probably go up to 780 at this 23% right here, where they make a 100% move. So I'm pretty sure the target is 780 or somewhere around there. I know Powell speaks in the next 30 minutes, so anything is definitely possible. So let's see if they dump this right here. They dumped it right almost at the 200%. Let's see if they bounce it right here at VWAP.
Oh, I'm going back in. Give me the 23, y'all. Give me the 23. Actually, yeah. Oh, baby, give me a chance, please. Baby, please. Actually, yeah, I feel more comfortable going up there.
Man, I know it's coming up towards VWAP, but man. Ah, shit. Look at that.
Easy work.
That's interesting. Well, there goes my answer. I guess they did bought it off of they bought it off the 50. Oh, this can't be right. When New York opens, all we trade is Nasdaq, 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 Nasdaq. When New York opens, all we trade is
Oh, 6. Nah, man, I've changed that to 1. Alright.
yo. If ES does that shit to me, if they do that, I mean, I'm pretty sure everybody is just waiting for. I'm pretty sure everybody's waiting for power right now at this point. I don't think nobody's gonna really be doing anything serious until we get to that first hour of his testimony. We'll probably see a drop probably before, but I doubt it.
Good morning. Bye.
Fed Powell's text release. So they released the text right where he released it. That's where we saw that pump. So I guess they know what he's gonna say. All right. And then we got Yellen speaking at also.
F yo. Dude, tired too. Oh. You gonna. Wow, okay.
You got a drop or something? Okay.
Okay.
All right, let's try this
Modification
out.
rejected.
Let's just do that. Where's my Nasdaq? There we go. Nasdaq 11. I mean, this is a bad. I mean, if I can get it, uh, let me see if I can get a limit order in. Let me see. Let me see if I can get a limit order in.
Okay. I see what you did. See what you did there.
Nah, that's nah. Nah. In order for get all my targets filled, this would have to go all the way up to 80 to get all my targets filled. I'm gonna need this to come down a little bit more. Man, they better not. Man, I just got a feeling that they're gonna do it, man. So
What?
we got 1, 2, 3, 4. We got 5 layers of stops underneath this low right here. Man, if I was short for 12 hours and they did me like that, you got 5 layers of shorts or sell orders underneath this low. Well, I'm pretty sure that's gonna probably be like the best entry. Damn it, baby, I had to think about it first. Just let me think about it. All right. Yeah, that wasn't good because I'm not gonna be able to get all my targets hit on this, even if it does work out. I mean, unless we super pump, which I'm not saying that we can't, but uh, let's see if we can at least get the first target hit. Let's see. Man, these bulls are just gonna give it up like that. They told me to short the market. I said, no way, no way.
I should have went fib to fib.
You know that's how it
Oh,
goes.
fib to fib.
No, that's how it goes. Uh, hmm. Actually, let me look at this on a higher time frame first. Make sure I ain't. Ah, shit. Am I tripping? And it does look like the bulls are failing. They're trying, and yet they're failing. Uh, okay, never mind. That's a good hourly candle. That's good. That's good. I mean, the bears are trying to, even though despite all the bears trying to sell this thing down, the hourly candle is still good. It's still good. So I think I'm good. I think long positions from that low is good. And then Bookmap shows a bunch of, it shows positive CVD right now. And it does show that the bears are trying to sell this market down, but the bulls are buying it up. So honestly, I just want my first target hit. That's it. Well, I want them all hit, but at least get my first target. That's what I'm talking about. Keep on buying. We might see some resistance at 46, 46, 47-ish. We'll see. We'll see if we see that. It's obvious that we're going to have to probably break this golden zone first and then use it as support if we're going to see higher prices. I'm going to keep an eye on the time because we do got Powell coming out in the next 15 minutes. And I don't want to be a part of a mass sell-off unless I'm short. That's what I'm talking about, baby. That's what I'm talking about. Ah, damn it. Damn it. Damn. Damn. Okay, it's like that. Are you in something right now, or are you just watching the movement?
I missed something.
Okay. We on the same side, or we on opposite sides right now? I'm long at
We on
7:30.
opposite sides.
Oh, you want? Oh, shit. Oh no, you long, right? You can't be short, and you can't short this. No.
No. Sure, I can.
Oh, that's dirty. That's devious work. That's dirty. Thank you. That's dirty.
It's dirty. Bouncing off my break even.
Oh no, you short 7:30? Huh.
33.50
30,
average.
33.50 average. Mhm. You know what they say, if it's breaking up your break even. Ah. Mm.
You know what they say? Close it. Watch I close it. She leaves without me.
Yeah, I'm not gonna take a chance on this one. Because she missed my first target. So that tells me that maybe the Bulls aren't as strong as I think they are right now. We'll see.
50%. Yeah, I do feel. I mean, their Bulls have always just been stronger. This whole freaking. We know this. Seen it time and time again.
Mm.
Right. Break that quickly, bounce off it. Just did. Saw that coming.
Hmm.
Stop playing with me. Playing with me, Smokey.
Hmm.
Thank you. All I'm asking for is 10 points.
In the begging stage.
Like, dang, that's all I'm asking for. Dang, that's all I'm asking for. My goodness.
You know what? No, oh shit. Oh.
Uh,
I can add to that, baby. There we go. Mm,
You know
I'm
what?
confident now.
Yes. Because I'm in the second stage. That's crazy.
Baby, please.
God dang. Just asking for 10 points. You can't even give me that.
The grief of trading the Nasdaq.
Oh my god. That's crazy. So wild.
It'd be nice if this.
Wild if I've ever seen it.
Ah, 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 ah. Hmm. I mean, you could tell that the Bulls are trying to buy this thing up, but the Bears are being real rainbow right now.
Y'all Bulls. Looks like y'all got it.
Hmm.
All right, then, Q. You gonna give me my 10 points now? So I can.
Hmm.
Come on, Delta, get red. Come on, give me a red bar. Yo, alright. NQ. NQ. Ah.
Damn, dude.
Bro. Yo, y'all supposed to be rejecting VWAP right now. Stop running. Me and this dude BP Lusk. Come on, dip down. He said stop running. Stop running. Oh shoot, that's what I'm
Hey,
saying, bro.
being
Like,
a bear is definitely a real thing, an addiction. It's a club. Dude, we know it's bullish as fuck. It's just we just wanted the short, goddammit.
oh my gosh.
Yeah, I'm reading his comments too.
That's
I was
not
just
even.
laughing at it.
Oh my goodness. I
Uh,
want the 5 minute, but just tap in. Yeah, tap in. Tap me in there. I'll clear it out. Just need you to tap in.
New York
Clearly. We got the algo coming too. All right.
You know that shit is historically bullish.
Give me my break even. Give me my break even so I can close out of this.
As soon as you close out of it too.
Foolishness.
When New York opens, all we trade is Nasdaq, 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 Nasdaq. When New York opens, all we trade is. You got out of your short, right?
No, I ain't get out my short.
Yeah, I know.
I want at least my break even. She's not gonna give it to me.
I thought you got out. Yeah, she does.
No.
She does. Unfortunately, that stop run higher is gonna be epic, man. Unfortunately. Unfortunately, that stop run is gonna be epic. because everybody is shorting this right now because everybody's like, Powell's about to come and he's gonna talk, he's gonna say stuff. I could have sworn a transcript of what he's gonna say was released at 7:30, unless I'm misinterpreting what that meant. You can see it right here. Unless I'm misinterpreting what this means, it says Fed Powell's text release. It came in at 7:30. So I guess we should know what he's going to say, or have an idea of what he's going to say. When New York opens, all we trade is Nasdaq. All right, let's look at ES. ES hurt my feelings. Well, I guess I would have got stopped out. I was in short literally right here at 39.25 all last night. And for 12 hours. Oh, look at that, dude. There we go, baby.
God.
There we go, baby. Pump it, pump, baby. There we go. Let's go. Oh, you so short? I said the stop run is gonna be epic. I'm surprised you stayed in it, dude. I'm surprised.
Go ahead. Keep cheering at my demise. I hope you got your points.
Yeah, I did, man. I did. I thought you got out of that shit, dude. I was like, dude, this shit's about to stop running. Like, why you get out?
Nah.
You good?
I'm stubborn.
I know, man. I get it. Stubborn bears, dude. You're talking to the choir, preaching to the choir. It took everything to move my stop to break even +1 on this short, dude. It took everything. I felt abnormal when I did that shit. Because usually, you add more risk to it. It's like originally my position's 5-point stop loss. I think I'm gonna put 15, which makes no fucking sense after you get out the trade, but that's how it is being a bear, man. It just makes sense. It just makes sense. Oh yeah. How bad is it, man?
Yeah, that's wild because I wanted the long too. I did.
Let me take some off because I know Powell's gonna probably dump it first. They're gonna probably dump it first. Let me take some of this off real quick. I just want to be in like at least 3. Yeah, I want to be in 3. I'll take I want to be in 3. Cool. But then we all know if we do get a dump, we all know Powell's gonna pump it right back up. And I think this is Fridays. This is still Friday's fib levels. And look at the market still using it. It used at 79%. It's been bouncing back and forth between it. It stopped clean at that 300%. So the market just made a 300% move. The market usually doesn't go past that 300%. If we make a 300% move, we usually get a reversal. But this is Powell we talking about, so I don't know. We do got a double top right here. We do got a double top.
Yeah, I see that. That's the only thing that that's keeping me from closing this position right now.
All right. Hey, we got Powell coming out in the next 10 seconds.
The negative reaction first. Dang. Give me my break even in Q. Dang. A bear can dream, right? uh,
Oh well, there goes that dream.
gosh,
That's crazy, man. You saw the
that's
ES
a
show? You
pipe
saw the
dream.
fucking
Pipe.
ES? Uh,
Did it explode up?
the ES exploded up. The Nasdaq is looks like a double top. Let me bring the conference up so we know what Powell was talking about. If they make it live. At New York Open, no, we trade as NASCAR, 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 NASCAR.
All right, pal. Can you take us there, please? Can you take us there, please, pal? Can you get there, please? All right, got my break even. Hey, no, don't you run away.
That's what I do. Take your break even too. Because you know
Take
Powell
it.
pumps
I
it.
know.
You know Powell pumps it too.
Wow, that's they went right to my break even. A tick before and a tick under. Oh my gosh.
Give me this one, show you. That's not even fair, ES. That's not fair. I mean, I would have got stopped out. Yo, that's exactly where I had my stop. That is crazy. Originally in this position, I had my stop at when I was in at 39, I had a 5 point stop. It was literally 44.75. Literally, I would have gotten stopped out. Wow. Wow. Hmm. Hmm. Well, like, I fantasized about this back in Chicago. Mercy, mercy me, that mercy allowed. That was me the first year that I blow. How you say broke in Spanish? Me no hablo. Return service. I should have went long right there. But let's see the reaction of whenever this thing starts. And then we get Power to say, good morning. And then the market just straight reacts to that.
Good morning.
As a part of the Fed's mandate, our dual mandate of monetary stability and employment, blah, blah, blah. We are committed to reach our 2% goal.
That's too funny. Because we all know what he's going to say. Part of our dual mandate. We're committed to the goal and inflation. Using the tools necessary. Interest rate.
Committee on Banking, Housing, and Urban Affairs will come
Oh,
to
there
order.
we go, baby. There we go.
Welcome, Chair Powell. Nice to have you back. Good to have you first this time of year. Ohioans know, Americans know that our economy fundamentally is not a fair playing field. Instead, we have a David and Goliath economy where the largest corporations use their power to funnel all the gains in the economy to the top, aided and abetted by too many people in this room. Corporations squeeze every last penny from Americans' pocketbooks and workers' paychecks. They don't even try to hide it anymore. The biggest corporations are charging more for less. Americans are frustrated. No, actually, Americans are pissed off. They have fewer and fewer choices. Those choices cost more and more. Keeping prices down is part of the Fed's mandate, but as many of us have made clear, the Fed's main tool to combat inflation, raising interest rates, does nothing to address the biggest causes of rising prices right now: corporate greed. Keeping rates too high for too long threatens workers' paychecks while keeping other costs high, particularly housing costs. Housing prices and rents continue to go up. It's no surprise that since the Fed
Shit,
began
my rent went
raising
down
rates,
because people
the
couldn't
amount
afford
of
to pay it
income
anymore, and it was
families need to
evicting people.
qualify for a mortgage
So my rent went
has
down.
nearly doubled. Homeownership has long been a bedrock of our middle class.
Yeah,
but
the
today,
constable is
fewer
like
and fewer
here
middle-class
every
families can
day
afford to buy
evicting
a
people,
home.
dude. It's ridiculous. Well, I
Higher
mean,
interest rates are making our
yeah.
country's housing supply shortage worse, not better. We need more housing
Damn.
construction of all types. Higher rates
Thank
lead to
you.
the opposite,
My good.
particularly make it harder for
Why did I need to take all of that
construction
pain and suffering?
work financially. Interest rates make borrowing more
All right, so let's
expensive
see,
for
man. Let's see if we can get
working
this
families
golden
for a
fib pump.
mortgage or a
You out your
car or
position?
anything else. Most people don't have the
I
luxury
missed my last target.
for everything in cash. And for the millions of Americans feeling their budgets stretched by higher prices,
Dang,
Let's
I
put
knew
this right here.
credit card debt to pay for groceries and other essentials have become an option of last resort.
pump up. You can.
But as more people struggle to pay
I'm
down
gonna
their
move that
debts,
down.
credit card interest rates are reaching
a tight trail.
highs. Last
Move
month,
this down here.
Chopra testified in front of this committee.
I just took a golden fib long.
Stated that
I
credit
took a
card
golden fib
issuers are
long to see if
charging higher
it'll work
rates
out.
far beyond what they need to cover their costs. Corporate greed rearing its head.
All of that for
Banks are
1600.
making record profits at
Dang
the
it,
expense of cash-strapped Americans. Every month that the Fed keeps rates high, Mr. Chair, it costs Americans money by
Damn, I
making
didn't
it more
even know
expensive
it
to
was
buy a
that
house and to borrow money.
high.
Borrowing costs stifle future economic growth, leading to fewer homes being built, leading to businesses making fewer investments in the economy, and eventually, that doesn't stop, leading to workers losing their jobs. As they set economic policy, I urge the Fed to weigh these trade-offs and remember whose jobs and futures are at stake. It's why I've worked with my colleagues to hold corporations accountable and will continue to do that. For instance, we fought to cap insulin prices for senior citizens. We'll continue to fight to extend this price cap on life-saving drugs for all Americans. And why my colleagues and I on this committee are working.
Man, he
it's
needs to
why
stop
we're
smoking
working
them
to lower
cigarettes that he
housing
smokes every
costs for
day,
more
dude. That's
Americans.
bad.
The Fed also continues its work to keep the banking system stable and ensure consumers' money is safe. Last year, the Fed and other bank regulators issued a proposal to update bank capital requirements, strong capital standards, and you've heard in this committee overwhelming support for strong capital standards. They're critical for the economy. It's our way of making sure
Yo,
that if
that's
Wall
so
Street's
crazy.
Wall
That's
Street
crazy.
bets go poorly, which they often do, investors, executives, and shareholders should pay for it, not taxpayers. The biggest banks have spent obscene amounts of money attacking this Fed proposal. But you, the Fed, don't work for big banks. You work for the American people. Your concern should be developing capital rules that protect Americans' money, not protect bank CEOs' stock portfolios. The Fed needs to look past these shameless lobbying efforts and finalize a rule in the best interest of taxpayers. Another dangerous piece of the Wall Street business
I
model.
just want that first target hit. That's it.
Banking system
But
less
yeah, I'm
safe
pretty sure.
is incentive-based compensation. This compensation
My break even is at 725. My first target is at 739 and missed it by 3 points.
Makes banks more likely
3 points.
to fail. We saw the results of that model in 2008. We saw it again last year with the failure of Silicon Valley Bank.
Dude,
and
I might be.
Signature. Other regulators
I might
have
be
moved
wrong on
forward
this
with
one.
a proposal to rein
I might
in
be
these
wrong.
reckless incentives. But the rule, Mr. Chair, can't move forward without your and the Fed's moving on it. This rule is long overdue. The Fed must make a statutorily required effort as soon as possible. The Fed also has the important job of reviewing mergers and acquisitions between and among banks. Over the last several decades, we've
that's
seen the
just
largest
doing
banks
what
grow
they
into
do,
massive,
playing around with it.
trillion-dollar companies, while thousands of small banks in rural communities in
Another
North
five.
and Southeast
It's an interesting
Ohio,
level, though.
in small towns in those communities,
Don't tell me y'all
all
want to go down
across
there.
America have disappeared.
Oh,
Say
hell
it is
no.
so.
Trusted
Hell
local
no.
banks.
You talk
Small
about
businesses have
705?
lost
Yeah, I see that, yo. I was like, that's
reliable
exactly where my
banking
stop is, yo.
partners.
What the fuck is up with that?
Regulators like the Fed have the crucial job
Oh, don't tell me y'all want to go down there. Say it ain't so.
sell stock layoffs. I recently
Ah.
sent comment letters to the OCC and the FDIC on their current efforts. I expect the Fed to take the
Come on,
proper
baby.
steps to ensure that its
Come on,
merger
baby.
review process is robust and that it protects consumers and communities. Finally, Mr. Chair, you must ensure the Fed has
Just hit
high
that first
ethical
target.
standards.
Hold on, are you
Fed
still in this
officials should
short?
never again be able to profit
Or
from
did you
their
get out?
positions by using confidential plans about Fed monetary policy and emergency programs to pad their investment portfolios. The board's latest update
Oh my God.
rules
Stupid.
is simply not good enough. It still fails to establish the clear penalties needed
Going on over
for
there.
officials who
Thank
make
you.
investments
Thank you,
in
man.
violation of the public
Can we get much
trust.
higher, baby?
A rule with no consequences
Can we get much
is
higher?
really not much of a rule at all. The American people need
There
to
we
be
go,
able to
baby. There we
trust
go,
that
baby.
the
There we
Federal
go.
Reserve works
That's what I'm
within the
talking
time and
about.
place cynicism that
You said
people
what?
about the government overall. The American people need to know that officials aren't abusing their positions for
Can we get
personal
much higher,
gain.
baby?
As chair, you have an important role to play to make sure our economy works for everyone.
Can your
not
boy
just
pass it
those.
in one day?
The Fed's
I'm halfway there,
Congress
dude.
must do their part to hear from people and other
I ain't that
stakeholders
stubborn.
to understand their needs. I look forward to the day how the Fed will balance its full mandate,
I know when to flip.
protect Americans' money, foster an economy,
You know, I missed the bottom.
dignity of work.
Yo, we got long at that golden fib, bro.
Can get much higher, baby.
We got long at that golden fib, bro.
Welcome back.
That shit worked out perfectly.
Biden broke this economy, and it's been very difficult to fix it. That's the bottom line. I want to start with
Can we get
Man,
much higher?
I ain't playing that stupid game, man. Take my
It
damn,
is very
take my
difficult
limit, man.
for anyone to fix it. Everyday families are struggling to put food on the table. Real wage growth is being eaten
That
away
is
by
true, though.
rising prices.
That
and
is
runaway
definitely true.
inflation. Think about the fact that for 52
That's what I'm
consecutive
talking
weeks under
about.
Joe
That's what I'm
Biden,
talking about.
wages were increased by inflation.
Oh, damn. Oh, damn.
Modification
consecutive
rejected.
Oh, shoot. I couldn't even
Back
switch
in
it fast
December
enough.
2020, South Carolina.
My screen delayed. Hey, yo. All right.
Today it's still
Yeah, I think I'm gonna be done. I want to push my luck.
50.
Yeah, your boy made 3K again today, baby. On the Nasdaq. On the
So it's
Nasdaq,
devastating to
baby.
the average American family,
Yeah.
particularly families like the one I grew up in, a single parent household.
When New York opens, all we trade is
See your
Nasdaq,
gas prices up
Nasdaq,
50%,
Nasdaq, Nasdaq,
your food up
Nasdaq.
30%, your cost of keeping your house
When New York opens, all we
cool
trade
or
is
warm up
When
25%.
a long comes.
It's not a challenge. It's not unfortunate.
What are you talking about? Oh, that's Senator Scott.
Crisis.
Man.
Too many households in America today are looking
Okay.
to check
Shorts.
and they fear
Just gonna get ate up
the
again.
challenges that
What they
are
asking?
coming our way. The headwinds. brought
Man,
to
Powell
us
ain't
by
even
the
said nothing
Biden
yet, yo. They just
administration.
talking about some stuff, man.
Headwinds, of course, is seen through the
Just
prism of
talking.
inflation. Inflation hasn't been this high since the Jimmy Carter.
When New York
Not
opens,
grilling
all
him
we.
yet?
Devastation
You said what?
is being felt and measured in households by too much
They ain't
month
grilling him yet?
at the end of the money. And that
They're
devastation
just telling him stuff.
is real for the vast majority of Americans.
All right, so yeah,
And
I
the
wouldn't be
point
surprised if we get to
I
like
tell you what,
8:30 today,
brother,
man.
it's
I wouldn't be
the Biden
surprised.
administration
I
throwing
do
the
got
Fed under the
840
bus
as a
or
golden fib on
any
my
other
on
way
Friday's
they can
chart.
deflect from the real
On
problem.
yesterday's chart,
I've seen it.
800 is that golden
Committee
fib
hearing after
area,
committee hearing after
and
committee
that
hearing.
840 is
My friends on
that
the left want to
23%
point their
on yesterday's
fingers at
chart. So
anyone
I
other
think the
than
golden
the
fib
real
and the
culprit.
23% usually lines up
1600 Pennsylvania Avenue.
depending on how you trade
Progressive
them.
wish list, spending projects, and out of control regulations of this administration continues to eat away at America paychecks. And they continue to blame, whether it's shrinkflation, greedflation, skipflation. They're looking for someone to blame except for Bidenflation, the
I think we're gonna get
devastation
much higher.
of Joe Biden's
We can
economic
get much higher.
policy. continues to impact
Definitely can't read
everyday
this chart
Americans.
like this though. This
The
is
American
crazy
people
work.
see through the facades and
Yeah.
real solutions. It doesn't take a
I'm gonna see if
PhD
we can
economist
definitely
to
touch this
understand what the average
740.
American is
It's this
experiencing
740
under
area
this
is yesterday's golden
administration.
fib.
When President Biden and my Democratic colleagues pump trillions of
And yeah,
dollars into our economy, those dollars increase the demand and pushes prices
yeah.
higher. It's that simple. The American people see and feel it every single time. And they see it, as I said earlier, the grocery stores, the gas stations, at the doctor's office.
Oh crap!
you
Let's
still
let
in
it go.
Undeniable. The
Oh, see,
impact
gold
is
got to that
astounding.
golden zone and it dumped.
Just last
Huh.
week, we celebrated the birth of our country, the birth of this notion of freedom and liberty. But American families got slapped with the most expensive July 4th on record.
Yeah.
Cookout this year costing on average 30% more than it did just a few years ago. I call that hogwash. What's worse is that this administration doesn't want to learn a lesson in economics. Instead of reducing the push for more spending and more regulation, they only simply double down. Let's take, for example, the tens of billions of dollars.
Okay, what are you doing right now, NQ? Oh, let's put that down there for safety reasons.
Regardless of the constitutionality.
That was 28 points.
So it's important to ask, who are the billions of dollars of forgiveness to benefiting? Well, the answer is simple. This forgiveness scheme will result in debt relief for 750,000 individuals from households with an average income of 300,000 or more.
I like it.
Just don't forget the fact that the average American
Let's look at the hourly
family
chart real
has a
quick
household
before,
income around $74,000.
because it is but a lot of bullish momentum.
So what we're
Yeah,
doing
that candle's
with
still
this
bullish. It's still bullish
unconstitutional
on the
student
hourly
loan
chart. I
forgiveness
think
is
we're still good
actually
for much higher.
asking the median household of $7,000
Much higher.
per household to bear the burden
I would like to see it go boom and
for
get bought back
students
up.
who live
I
in
would like to see
households
that
of over three.
right here. Tap in and then go. But
The actual cost of this
it's been a little off lately.
70 and 1 billion and 1.4 trillion dollars. So why
Yeah,
do we
just 4 hour too.
why do we
Dang.
families struggling paycheck to paycheck
Look how many 4 hour green candles we've had.
relieve households?
Yeah,
of
these bulls are just
Yo.
completely regarded,
student
yo.
loan debt?
Completely
Well, the
fucking
answer is pretty
regarded at
simple.
this point.
Politics.
Yeah, I'm looking at it now,
One
yo.
Way.
Yeah, I know.
1,
Vote
2,
after
3,
vote
4,
for no
Completely regarded, yo.
6, 7,
just
8,
mark the man.
9
So I
green
appreciate your measure
4 hour
of
candles so far.
Cool inflation. I think it's past time we all
Yesterday.
recognize what's truly going on. Political pandering from the left. I
Bears can't
believe
even-
that our economy cannot handle any more of this wasteful.
They couldn't even dream about
Disagree, I
something
love
like
the
this
thoughts.
going their way.
But it's not just
At this
spending
point-
policies that stifle growth, also overregulation. And I can't think
Man,
of
we
an
are
example
going much higher.
overregulation
But I
and
want
marking more
a safe.
capital on the side.
I want a safer entry.
Free end game. That
That's what I want.
proposal itself
I mean, we know
cost
that
millions of Americans their chance to own a home
Where's your golden fist? Some yours.
and have
Okay,
access
so-
to the capital necessary to make.
so my golden zone is
For
at
those who are actually
715. That's where we got in long
watching,
at.
this hearing today,
We got in at
on
715.
C-SPAN, Basel
The
III
23% is at
capital requirements are like
73.90, which
taking the star
honestly, that's
quarterback,
almost
Dak Prescott,
exactly where the
and
market
telling
will
him to
probably
sit on the
reject that. Let me put that
sidelines
right
because
here.
he just might get
That's probably where the
injured
market will
during the
reject from.
season. It's just
And I
plain
got some higher
ridiculous.
golden fibs
But
at
these
850,
proposed
which
capital requirements would just
we might get to.
do that, forcing more money to the sidelines
We'll see.
of the
It's gonna be a runner
greatest
contract though.
economy on the planet, and out of the hands of first-time home buyers, business owners, and folks trying to achieve the American dream. The stakes are high, and that is why we get this right. You've heard me say this a number of times.
I mean,
but
they
it
may
bears
drop it
repeating.
and they
We
may
need
buy it up
transparency
at
in your
41,
rulemaking process,
741. They may
as this
buy it up
abnormal
there
proposal lacks any form of clear justification.
because they
Joe
have
Donald,
been.
It is essential
I mean, I guess the
that you,
23% lines up with the
fellow
golden fib, like I said before.
governors and the other
but
agencies join in this rulemaking, follow the law, do the homework, and then let the public check the work. And that's why I believe that it is absolutely necessary to have a complete re-proposal of Basel III Endgame.
I mean, honestly, I shouldn't even have to add to this because I'm already up $1,600 in this 50K account. So
what is necessary.
I'm basically halfway there at this point.
Any increases in capital that are not quantitatively justified harm the people. Home buyers,
$10K
need and deserve access to credit.
I want to protect what I got. It was a stressful
making process
situation.
Pull the
waiting on that.
and have a complete.
Of course, I'm always early. How you get in on
when the data has been analyzed and is available for the public scrutiny, reissue an appropriate
You said how you get on the what?
rule following the requirements of the APA.
On the,
I look forward to your opening
on the head
and have a chance to have a conversation afterwards.
instead of the shoulder.
God damn, I don't even said nothing. It's been 20 minutes. Let this man talk. I just been telling him shit. Like, damn. 20 minutes in. He ain't even say nothing yet.
I appreciate the opportunity to present the Federal Reserve's semi-annual.
Well, as you know, Senator, our mandate is
Federal Reserve remains
dual mandate.
Look, he's saying it. He's saying it. He's saying it.
Benefit of the American people. Over the past 2 years, the economy has made considerable progress.
He's saying it.
2% inflation goal and labor market conditions have remaining strong. Reflecting these developments,
he got that line, that phrase memorized by heart. That's
I will
too
review
funny.
the current economic situation before turning to monetary policy. Recent indicators suggest that the U.S. economy
Man,
continues
it's going to be a
expand
sad day
at a
for the
solid
market when
pace.
this man finishes his
Gross
term
domestic product
as
growth
chair.
appears to
We don't
have
know who we're going to
moderated
get
in
next.
the first half of this year, following
All we know it ain't going to be
in the
Powell.
second half of last year. Private domestic demand remains robust, however, with slower but still solid increases in consumer spending. We have also seen moderate growth in capital spending and a pickup in residential investment so far this year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, a broad set of indicators suggests that
All
conditions
right, so let's
have
see if
returned
no, I'm not going to
about
add to
where
this
they
position.
stood
I mean, I'm
on
already
the
up.
eve
I don't
of
need
the
to add to
pandemic.
it.
Strong,
If
but
anything, I'll
not
just switch over
overheated.
to a new account if I
The
want to take
unemployment
this
rate has
long.
moved higher, but was still low, was still at a low level of 4.1% in June. Payroll gains averaged 222,000
All right, so let's see
per
if this golden
month
zone going to hold
in the
up.
first half of the year. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in labor force participation among individuals aged 25 to 54, so-called workers in their prime working years, and a strong pace of immigration. As a result, the jobs to workers gap is well down from its peak and now stands just a bit above its 2019 pre-pandemic level. Nominal wage growth has eased over the past year. The strong labor market has helped narrow long-standing disparities in employment and
Oh
earnings
shit!
across
Okay.
demographic
Oh no,
groups.
let me just get into a new account. I just saw
Inflation
something.
has eased notably
saw
over
it.
the past couple of years, but remains above the Federal Open Market Committee's
What happened?
long-run goal of 2%.
I see this a lot
Total
with the
personal
golden
consumption
fibs.
expenditures prices
I'ma take it.
rose
I'ma take it.
2.6% over the 12 months
I'm
ending
gonna
in
take
May.
it.
Core PCE prices, which exclude the volatile food and energy categories, also increased 2.6%. After a lack of progress toward our 2% inflation objective in the early part of the
Dual
year,
mandate.
the most recent monthly readings have shown modest further progress. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee has maintained the target range for the federal funds rate at 5.25% to 5.5% since last July, after having tightened the stance of monetary policy significantly over the previous year and a half. We've also continued to reduce our securities holdings. At our May meeting, we decided to slow the pace of balance sheet runoff starting in June, consistent with the plans released previously.
Okay.
A restrictive monetary policy stance is
I think
helping
that's
to
good
bring
right there.
demand and supply conditions into better balance and to put downward pressure on
Oh
inflation.
crap! No, that's not good.
The committee has stated that we do not expect it will be appropriate to reduce
Oh
the
shit!
target range for the federal funds
Damn.
rate until we have
Damn.
gained greater
Okay.
confidence
I got
that
into the
inflation
wrong
is moving
account.
sustainably
Damn.
toward 2%.
Damn.
Incoming data
Damn,
for the
okay.
first quarter of this year
I got into
did
the wrong
not
account.
support
That
such
was not the
greater
account that I
confidence.
wanted to trade that
The
in.
most recent inflation readings, however, have shown some modest
Damn.
further progress, and more good data would strengthen our confidence that inflation is moving sustainably toward 2%. We continue to make decisions meeting by meeting. We know that reducing policy restraint too soon or too much could stall or even reverse the progress that we've seen on inflation. At the same time, in light of the progress we've made both in lowering inflation and in cooling the labor market over the past 2 years, elevated inflation is not the only risk we face. Reducing policy restraint too late or too little
was not
could
the
unduly
account that I
weaken
wanted to trade
economic
in.
activity and employment. In considering
Forgot.
adjustments to the target range for the federal funds rate, the committee will continue to practice of carefully assessing incoming data and their implications for the evolving outlook, the balance of risks, and the appropriate path of monetary policy.
Damn.
Congress has entrusted the Federal Reserve with operational independence that is needed to take a longer-term perspective in the pursuit of our dual mandate of maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving
Yeah, I'm gonna
maximum
take this
employment
loss.
and stable
Fuck.
prices over the long run.
Fuck.
Our success in delivering on those goals
fuck.
matters to all Americans.
Yes, sir,
Conclude
baby.
by emphasizing
Yes,
that we
sir.
understand
No
that
way,
our
NQ.
actions,
No fucking way,
communities,
dude. You
families,
better.
and friends
Oh my
across the
god.
country, everything we do
Yes,
is
sir.
to our public mission.
All right, so I
Yes,
just lost
sir.
all
Thank
that
you.
money
I
I
look
just
forward to
made.
your
I just tapped into the wrong fucking
Thank you, Mr.
account.
Chair. And the
God
Senate member of the
damn.
committee will begin the questioning. Senator Reed.
Well,
Yes, sir.
you know what that
I'm
means.
sorry.
You know what that
Nah,
means.
don't do it, bro.
Trump has
Don't do it.
indicated
I gotta get it
he
back.
would propose if
Don't
Fuck.
revenge it. No.
a
I gotta
substantial
get it back.
tariff of
That
between
was
10
not the
and
account I wanted to do that in.
60%, and by doing thus, eliminate the federal
Had to
income.
wait to the questions to get the
First,
freaking shorts to work.
What would be the impact of tariff on prices, consumers, and the economy?
Oh no, don't.
Thank you, Senator Reed. So I'm
be a
going
part of
to
it.
say that
I'm getting greedy.
we go
I know
very
I'm greedy
far
right now.
not to comment on
Oh, another
campaign
5K. Nope, I'm done.
information.
I'm
Do
done.
that. We also don't comment
Nope.
on trade policy. We
Done.
have really specific and important
Done.
jobs, and we try to stick to those.
Well, I'm glad I allowed you to establish that.
Alfred,
Right.
you did it.
Let me opine that
You did it.
10% increases in tariffs
Nice.
is going to have an effect on
Nice.
prices.
Nice. Nice.
Oh,
It's going to increase them.
Nice.
It'll be passed on.
oh,
60%
Nice.
tariff increases are significant. And in
Nice.
fact, I've been
Nice.
told that
Nice.
to replace the income tax,
I think that was the
have
short
to raise
subjective. I
tariffs
think
across
like
the board,
all freaking
70%
pre-market and all
make
day.
up for the loss
Mhm.
of the income tax, which
They
would
barely got that off of.
huge economic problems. I respect your
I think now we
neutrality
pump.
and your neutrality.
Or is it going to be dump,
Don't seem to add
leg up,
anything that would
and then
help.
a second leg down?
Let me
Nah.
say
Two-legged
something else that might be more within
shape, pump back all the way up.
with fun.
Dude, I can't
You
believe
said
that,
in your
man. I
opening
can't believe I
statement
made a
that
stupid
labor
mistake.
markets appear to be in a better balance.
Why did I do that?
And that's one of the key
That was
factors
not the
to
account.
judge
Man,
whether
I-
interest rates can be raised.
So I kind of wanted to see what happens. So I have an account
I must say, I'm
specifically
concerned a bit
to
that
see what
we're
happens.
not on a very fast
And
track to
I
decreasing
I put myself into
interest
the
rates
wong
up there
account.
from the Fed.
The one that I was actually building
better
up.
balance you cite. Could you comment on that, Mr. Chairman?
Sure. So the most recent labor market data do send, to your point, a pretty clear signal that
So
labor
yeah,
market
so I
conditions
tagged into the
have
wrong
considerably
one.
compared to where they were 2 years ago.
And so now I got to get all that
This
money
is no
back.
longer an overheated economy. This is an economy, as I mentioned in my opening remarks, that is more or less back by most measures to where it was before the pandemic. And that was a strong labor
Oh,
market,
it's
but it was not.
going to be a two-legged pullback. Why are they buying all this?
I
But
think that the upshot of that really is that
No,
we
I think
are
I think
well
we're
aware,
good, dude. I think
that we
I
now
think,
face two-sided risks.
the way
and have
the way
for
that
some
it
time,
just
but now
dropped just
the
now.
labor market appears to be
I'm
fully
thinking
back
that
in
this
balance.
could be the
We know that if we move too quickly,
because we kind of did
we
top.
risk.
We did touch
risk,
support just now.
unnecessarily hampering economic activity and possibly interfering with the ongoing expansion.
yeah, that's a key level here.
Too slowly.
Hey, what are they saying?
We may
What are they asking?
have done well. Actually, it's the other way. If we If we loosen
all right, so let me
policy
look at ES real
too
quick.
late or too little, we could hurt economic
That's crazy. I
activity.
still would have
If
not
we
got my targets
loosen
hit with
policy too
ES.
much or too soon, then we could
I
undermine
still wouldn't have got
progress
my
on
targets
inflation.
hit.
So we're very
No.
much balancing those two risks.
short.
That's really the essence of
I still would have been in
these
this.
days.
But the direction seems to be going,
Okay, I need to look at a higher time frame chart or tick chart.
would hope.
Oh, we already hit
Which,
that.
it's then a direction.
So I think if you look at
What
the
level
last
is
summary of
that?
economic projections,
So long.
I guess I would say it this way.
It was somewhere down here, like
It
680.
doesn't seem likely that the next
681.
will be a rate increase. We don't
And
know
I had-
that off the table, but that does not seem the likely direction does seem to be as we make more progress in inflation and as the labor market remains strong,
right here.
some policy at the right moment.
Thank you. Just 2 weeks ago, the Supreme
Damn,
Court
all that
handed out
fucking
two
work gone,
decisions
dude. I
that
didn't mean to do all that,
impact every
man.
Federal
Damn, I didn't mean to do all
regulatory
that.
agency, including the Federal Reserve.
I'm sorry, bro.
I didn't mean to do that. I didn't mean to do that. Thank
Had
you.
eliminated
Just show
judicial
mercy.
deference
Show
to
mercy.
agency
I didn't mean to do that.
for many, many decades. And they also dramatically extended the statute.
I will not show mercy today.
Procedure Act. What is your judgment? Is the key
No.
effect of these decisions? on the Federal
Okay.
Reserve?
All right, man. I
More
can't.
broadly, what
I
does it
can't
mean
survive
to the
that.
economy
I got-
if virtually any regulatory decision
I wouldn't be able to survive that.
can be second guessed by a judge?
I wouldn't be able to survive that.
What position are we in now?
So we're as
Oh,
an
did it bounce at
institution,
88? Oh,
very
it bounced
focused
at 88? Oh, it's still going.
the
Okay,
actual
still.
letter and intent of the law,
Yeah, she's still
following
going.
it carefully.
No, I think.
Strong institutional value
think
we
it's-
have.
I can't do that. I can't do that. I
Brand new
can't do it. I
decisions that
can't.
just came down and we're really in the process of just studying.
Oh,
We're gonna go
no.
for you on them, but we will, of course, follow the law as the Supreme
Oh,
Court,
my God.
as our
Oh,
Supreme
that
Court
hard
has read it,
work.
because that's their job.
God.
Well, thank you. And I
Oh
concur
my
with
God.
compliance with the law, but
Huh.
when you do your analysis, and if it is detrimental to your ability to
Well.
regulate the banking industry in the United States, I think you have an obligation to make that public. Thank you, Mr. Chairman.
Thank you, Senator Reed. Senator Scott from South Carolina is recognized.
Thank you, Mr. Chairman.
I got like $1,000 left, dude.
We've heard a steady stream
So,
of
you already know what
commentary
that
there will
means.
be changes to Basel III endgame proposal.
Drawdown?
Can be
Yep.
seen certainly as good news. Some reports say
regroup.
it could be finalized
Nope.
as soon as
Gotta
August.
regroup.
Others say we're circulating a term sheet for a revised.
All right.
Let's
Nah.
Through it all,
This shit got to work
this
now.
proposal will have outsized impacts
stuff gotta
on our
work.
banking system, from big to regional, these foreign institutions, as well as impeding access to credit for consumers. So even though you yourself
Damn.
have said there will be broad
Damn.
and material changes, I believe this proposal is flawed, both in process and in substance.
Yeah, I got like
and
$1,000
should be
up in
withdrawn.
drawdown.
Do you agree? And will you commit to
Like
withdrawing
1,100,
the
1,000.
existing proposal and issuing a new
So-
proposal with a robust notice and comment process?
finally
Let me update everyone on the,
put the pile to actually do something.
over the past several months, we've had, in fact, Vice Chair for Supervision Barr
Okay.
has held a series of discussions with the other bank
Dude,
regulatory agencies.
can I take control of my mouse,
around
please?
potential changes to the original proposal. I'm pleased to say that we've made quite a bit of progress on those and are, very close to agreeing on the substance
Modification rejected.
of those changes. And I can't really be specific because nothing is agreed until everything's agreed, so I won't have a lot of specifics for you today. The question where we're continuing to try to make progress is that of process. So it is my view, it is the strongly held view of members of the board that we do need to put
Damn, that is not what I wanted to do, man. I can't
comment
believe
for
I
some
did that.
period. And the reason
God
is,
damn, stupid
when
mistakes
there are
like that,
broad and
man.
material changes,
Just
that has
stupid
been our
mistakes like that.
practice. We don't see a reason to deviate from that practice. It seems to be consistent with past practice and with the Administrative
Nah, this
Procedure
shit got to
Act.
work, man. This
So
shit got
that's
to work. It
very
got
much what
to.
we think, and we're working through
This got to work.
that question with the FDIC and the OCC. We haven't
All right,
reached
so let me look at the
agreement on
higher
that,
time
but
frame so
I'm
I can
very
fix
hopeful
this
that
stupid
we will.
mistake.
We're
All
prepared
right,
to
so
move
we can
forward
probably
at
get to like
when we do reach
7:35-ish.
agreement on that.
All right, so
I appreciate
we can
most of your
possibly
response
get there,
I do
man.
want
We
to
can
discuss
possibly
one
do. We can
aspect,
get there.
more of Basel before we move on to another topic. I find it very concerning.
Because
with
I mean,
how
I know
much
when
of this
Powell gets done, he's gonna
proposal
pump this shit
process
anyway.
appears to have been done behind the Fed, FDIC, OCC proposed Basel III endgame
And we can
last
definitely,
July.
we can possibly,
And in
like I said, we
October,
can see this today.
The Fed
All right, this position
began
got
the
to work
collection
now.
of data to conduct a quantitative
It has to
impact
work.
study
All
on the
right, so
cost of Basel III
we got.
proposal, a study which I will note should have been
All
conducted
right, so I got like
before
2K
any
back, man.
proposal was ever
Well,
issued. Move
God
forward to
damn.
January of this year, Vice Chair Barr
What did you just do?
to a public
Man,
comment
you know I
period
over leveraged to get my
once
money back.
results of the study were published.
All right.
We're still waiting to view the
I just
results.
got like 2K
Keep
back.
in
Like
mind,
what?
all the while,
That's
we're hearing
wild.
rumors that the Fed is working on revising its
Absolutely
proposal,
wild.
moving towards
No,
an
what's
updated
wild is
version.
that I lost all that
Please help me
damn money.
understand
That's
how will
wild.
the Fed revise or reissue a
Okay.
capital proposal before receiving public comments? Basically, my question.
Well, as you know, we have received extensive public comments.
Okay.
And we've also evaluated the quantitative impact survey that you mentioned.
Yes.
So the idea would be when we do reach agreement with the other agencies fully, that we would publish the you know the
Yeah, I'm gonna have to
proposed
probably do
changes and
a
also
lot of scaling in.
the quantitative impact survey and also the effects that the QIS suggests.
AQ, baby,
the
please.
changes have. So we'll put all
Baby.
that out for comment again.
Man, come on, man. All you had to do was hit that damn
And
target,
then,
man.
having had
Baby,
yet another round,
715.
we can then
You didn't want to do that.
that's basically
wanted
the
to
broad
stop.
strokes of how I would see this moving forward.
And how long do you see the
Baby.
opportunity for public comments?
AQ.
So it would be meaningful. I mean, it might be 60 days. We don't need to make, it doesn't need to be a long, but you know, before we do that, there's a lot of work that needs to take
Oh, you still
place,
trading?
you know, before you
still
actually put out the revised proposal. So it will take some
poll
time.
was
and
50-50.
then
Oh,
we
there we
would
go.
put it out and
There we go.
it would be, I mean,
I
it's
made a
taking
poll.
number 60 days of
Should I be
comment, and then
done?
we would get the comments back and
Yes or
there'd be
no?
another period of evaluating.
What happened? My
comments,
stuff's frozen.
and
Did
only
we
then
cross
would you go
15?
final. So there are
All
some
right,
number of
trail.
Well, just final
Okay.
point as
We
we're
hit 15.
running out of time here. I think
Nah.
Senator
Trail,
Reid
tight trail now.
made the comment about the Chevron case and the impact that it could have.
Touch 15.
From my
That's all I
perspective, the
wanted.
regulatory state.
All right.
The necessity of a cost benefit analysis
I would
of
love to see
regulations
VWAP
that will
in
impact the economy, I think.
I would love to see VWAP.
In the
Without hitting the stop.
plus pages of Basel III,
We'd
there
love
were
to see
about
it.
20 pages that reflected some kind
We'd
of
love to
cost
see it.
analysis approach. I really hope that we see more of that going forward.
AQ, we'd love to see it.
Thank you.
Senator Tester from Montana is recognized.
Well,
We'd love to see it in
thank you
Q.
for courtesy.
You don't gotta hit
You
stops.
here today.
Keep on going.
Appreciate.
Hit
your
these
work.
short so yeah, this might
Regardless of what
that's
going to
VWAP.
state.
No,
Anna,
don't do it.
it's a big issue.
Nah,
whether
I can't get
Billings or
scared.
Butte or Bozeman
I can't
or
get scared though.
Busby or
No, that shit hasn't hit my
Sandy, it doesn't
targets, man. I need my
matter.
money back.
Larger towns,
can't
to
get scared.
medium-sized towns, to small towns.
Can't get
Housing is
scared.
a huge
Can't.
issue.
You think it's gonna probably reject our VWAP
Correct me
though?
If I'm not correct.
You
in
said
that.
what?
And I was wondering how the housing challenges fit into.
I wanted VWAP as my last one, but I kept the trail
So
tight
we
because I ain't trying
we
to.
do pay a lot of
Give all
attention,
this up.
and I would agree with you. We have
Hey,
significant
yo.
housing issues in the country.
It
and
was
we had them
sketchy. Hey,
before
it
the
was a little
pandemic.
sketchy at first.
Certainly
but we
the,
Gucci today, baby.
The pandemic
Dang,
has
6,500,
created new distortions,
$95
and you know,
these positions.
monetary policy
Let's
works
go.
through
I'm
interest-sensitive
done.
spending. There is no more interest-sensitive
I'm done for real
spending
this
than,
time.
you know, buying a house and having a mortgage. So
This area right here is tricky.
Ah,
title
damn,
policy is having an
damn, okay.
effect
Damn.
on economic activity in the
Damn.
housing sector.
Damn,
And-
damn, damn.
but I would also
I knew that was
say
kind of gonna be
the best
kind of
thing we can do for housing is to succeed in getting
Potentially.
inflation down to 2% on a sustainable basis so that rates can.
Yeah, this area from
housing
here to
market
VWAP
can
is
get back
tricky
to
because
what was the
that's where they
pre-pandemic,
previously bought off
just as
of.
still a
Yeah.
housing,
Now could be seen
but
as
not dealing with the kinds of specific things we're dealing with now.
Yeah, now
Let me drill down.
I'm
a
do
little
or
bit.
die in this position
I'm
now.
speaking,
My stops are orange. It won't let me
Not
move it.
necessarily from a housing cost you just brought up.
It's
I'm
do or die,
speaking
baby.
from a standpoint of economic growth, and that there are plenty of small businesses, schools, hospitals.
she trying 30, man. Put one down at VWAP at least.
Dude, I can't even move
expand
I
because
can't
there
move it.
simply is no place for them to live.
It's doing that thing again
How does
where
that fit
it
into
turns
your
orange if I move
economic
it.
outlook metrics?
So
Because I think it's
MFF.
my
Close out.
At least I think it's
No, we don't do that.
limiting the opportunity for expansion. It's entrepreneurs, business startups.
Tommy is saying no.
And does that fit into the economic that you're looking
He
at?
said we don't do
Our
that.
mandate is for stable prices and maximum employment. And again, I think for housing supply, the best thing we can do is get inflation under control so that rates can come back down, so that we can have a more normalized set of rates and a more normalized housing.
We just need these bulls to get super regarded. That's it. Come on, bulls.
To increase housing supply.
Let's get regarded.
Are really not so much in the hands of legislatures. You know, state and federal.
Do you believe that if we were to put
They need to
forth
hurry the hell up, man.
housing incentives, whatever they may be, that could have a.
They will. Well, like I said,
if
this
those incentives
just
resulted in more
area could be
affordable
said.
workforce housing on the market that would have positive.
that would be crazy.
You know, these are questions for you, but
Yeah,
I
I've
would
heard
say
it.
this.
I am.
I'm aware
Yeah,
that we
2 days of hard work.
housing is in short supply,
I'm Gucci.
and that for many it's a critical.
About to let
need
this
for the
lock in.
workforce.
I gotta let this lock in.
More of it is better,
Dashboard
but
can
as to whether
update,
the fiscal
and then I'll
policy
request it,
you should prioritize
tomorrow morning.
not up to us.
Look, I want to talk about the.
I think their dashboard updates.
Because I know that you are a strong.
I think when the
independence, as am I. And,
after hours
political influence, I don't think helps.
I think that's when it updates. I'm not sure.
Country.
Take
And
profit.
so give me your perspective at least on why
Okay,
the
so-
central bank
All right.
independence is so critically important.
Thank you. I'd be glad to.
I started off rough.
It's essentially all
stressful
advanced
shorts. You can see by my
have
freaking chart.
adopted a policy
my
of central bank
entries.
and operational
I
independence.
wanted the
That just
long.
means that
Caught the long
we make our
here.
decisions. We're instructed to
Didn't
make
quite
them
make it
without
all the way.
taking in
Got out
extraneous
there.
factors, one
Nah.
of which would
Probably
be
on the
policy.
trail.
And the record is pretty clear that that's
Just a stressful short. Sat through hella
a good
drawdown.
institutional arrangement that serves the public.
Caught some longs.
We
Got
just
out
want
and
to
darn
stress,
near the
as we do
top.
periodically, that this is an
Ugh.
institutional choice that
So,
we make as a
I should
country.
have flipped
And
short.
as long as
up
it's seen
here.
to serve the public well, it's a good choice. We think so.
We caught it. We caught
Okay,
some of it,
on advanced economy,
or a majority of it.
there's some that talk about the economy of this country
43.
being in very good shape.
I should have been short in the 60s.
Tell me how the economy of this country is doing compared to other advanced
You at
economies
least
that
get
have
the
central
VWAP
banks.
touch.
You know,
They
there's
just
been, lots and lots of
Hopefully we can get
international
above
discussions
VWAP
as part of
because,
my
like I said,
job,
I ain't gonna be
and
able to
the
move
story
this.
For the
Oh,
last 2
okay,
years
never
has
mind.
been just how exceptional the
Man, come on.
performance of the US economy has been.
Yeah, I know,
And
right?
That's not a secret. You know,
Hold on.
there's a-
Yeah, they just inching it on you. Like,
clearly the U.S. economy has performed
no.
very well compared to sort
yeah,
of
caught this short.
advanced economy.
Got in at the
Colleagues.
bottom,
Is
caught
there
the
any country in the
longs.
world with central bank
That's what-
advanced
yeah.
economy that's performing better?
And I ain't want to wait
Central
for all
bank?
this. So
No,
hit my
any
trail.
economy that
Got out.
it's an
I'll
advanced
take it.
economy that has a central bank that performs better than us.
None comes to mind.
Come on, baby. You're almost there, boo. Come on, boo.
Thank you.
Come on. Come on. Don't give up.
Thanks, Senator Tester.
There we go.
Senator Rounds
There we
is
go.
recognized.
Got it.
Thank you, Mr. Chairman.
There we go.
Got it.
Mr. Chairman, first of all, thanks.
All
for
right.
coming
I'm
in
only
and
down
listening to
$1,000. I'm only down
I just wanna
$1,000
focus on
now.
two
I need to get that
specific
back.
items, and I'm going to start with 3 end game.
Only.
Thanks,
Man,
Senator
look, dude,
Scott,
I just
for
lost.
You did.
a job of kind of
You said
laying out
what?
the concerns that many of us have had with it.
How much did you lose?
Would-
Man, dude, I was down
Into one
5K,
particular
bro.
issue, which think
I just
a
made
lot
all
of
that
folks out there
shit.
that
I was
follow
down
this, and
5K,
I
bro.
know it's technical
I
in
just
nature,
lost
but
5K in that
let me
drop,
just ask
yo.
a specific
Oh,
question,
my
and you can kind of pick it
God.
apart for me, please.
I lost
Both
5K in
you
that
and
drop.
Vice Chair Barr have
Yeah.
confirmed that there will be
And I wasn't
material
supposed to be
changes
in that
to
account. That's what
every
makes
risk
it.
type outlined
Because,
in the proposal.
like I said, I had to.
Since there will be
I just wanted to see what
significant
happens.
changes,
I wanted to see if that
do you
golden zone was
believe
going to work,
where
even
the
though
agencies have landed now would
it
be
didn't look
considered
like
a
it was. I just wanted to see.
logical outgrowth of the
And then
original
I got into
proposal
my
from last
account that I traded this morning.
For those people who are not familiar with, that's the legal.
And I was able to get
test
that money
for what
back, or
turns
some
out
of
to
it
be
back.
If it's a logical outgrowth.
So
if it's not a
actually
logical
now,
outgrowth, that would
I need to
require
make $800
legally
more,
require
and then I'll
reproposal.
be back at break
And I don't want to
even.
make the legal judgment. I will just say again.
Hey, just be careful here, bro, because
Yeah, I see
and
it.
strongly held view of
I see
my-
it.
some of
Hopefully
my
the bears
colleagues on the
see
board
it,
is that it will
and they
be
get used
appropriate
as
for
fuel
us
to pump
put
this shit
out
right back up.
the changes again for a period of
can't
time.
you cut the position and then like
It's the
re-enter?
right thing to do. It's what we
No,
would do.
you know that does. You know that
typically
it don't
in a
work that
situation
way.
where there are, material changes to a proposal.
Do you feel
Because
you
I'll be
need consensus
re-entering
on the
right
board
here.
to allow that
I
to
mean,
move
even though my
forward
break
in
even
terms of an
appears
additional,
right here,
comment period?
Yes, but of course we have to get.
I still have
the
contracts,
FDIC and
or
the OCC,
my real
we're
entry
in
is all the
discussions
way
with
down
them
here.
to work on something.
It's just
that
showing
would
in my
meet
scaling
that need.
that's up
and
here.
We have to get their
I
agreement
scaled
too.
in some contracts at the
So,
top.
it sounds like that's the path that you would like to go down.
Yeah.
If that were the case,
Yeah, I got in
would it be
around
fair to
like
say that
80,
we'd probably
80,
be looking at
90-ish.
final determinations or recommendations for
It's 500 chart looking like. Okay, yeah.
into next year before it
Yeah, they blast.
final
If they run these stops
think
past
that may be
freaking
right.
VWAP, yeah,
it's-
it's a wrap. But then
Yeah, I'm thinking that they can
There's
probably
a-
get it
that
to
could be
like
right, yeah.
this golden
I mean,
zone up here. I think that's where
you
that's
can't-
where they're
it's hard
trying to
be
get
precise. You know, we would put it out. It takes some time to write this stuff up. Then you put it out for comment. Then you get the comments.
oh, you think in
comments?
40s?
Write the final
to. Yeah,
rule.
possibly.
You know, beginning part of next year is a good.
Because we know that the
good-
Bulls ain't we. You know that was just them taking profit, baby. You know it was just them taking profit, baby.
our economy here, and a lot of our financial institutions, this is a significant change. and it's one that a lot of people are following. So I'm trying to get you to
You know it was just them taking
the
profits.
depth of this as much as possible. And I thank you for that.
Shit.
I'd also
I
want to
told,
go to another area.
hey,
And once again,
what did he
something
say?
I have
What-
had visits
They had
about
to
in
set or ask something.
before, but
Shit,
wanna
I
talk
don't know,
about
man. I'm
what
just.
the parts of
I'm too
inflation are,
involved in
what
this
parts
right
you
now.
can control, and what parts.
All right, so I'm only down
you
$300
really
so I
can't
just made
control.
about. I
The
lost
demand side
5K
of
and
the
I made that shit
equation
right
on
back.
Inflation is the part that you have the tools to work with. But there is the supply
Yo, all we
side
trade
of
is
the
NAS
equation,
crack,
which is
NAS
still
crack,
out there.
NAS crack,
Bro.
NAS
I wanted to
crack,
just lay this
NAS
out because
crack.
as we do this in this setting, it naturally becomes political in nature.
I couldn't
because
do
the
that on
one
no
of the-
ES, yo. I couldn't have
the
done that on
starting points
ES.
we'll
I
talk
couldn't have done
about
that.
is when this
could've
administration
done that
took
on
office
ES.
and what happens with supply side issues at that time. And as I work my way through this, I just want to share the concerns that I've got. And I recognize you don't want to be.
I think we
political in
shoot
it,
to
but
the
I wanna lay
60s
this out,
again,
and then I want to
because
talk about
unless it rejects a
control and what you
previous pre-market high
with regard to making
right here,
changes on inflation
48.
through the process.
Oh yeah, so
When President Biden
Go
took
ahead.
office, gasoline,
I was just gonna say,
since President Biden took office,
stops.
gasoline prices have risen over 54%.
so
Energy
that
prices
kind of
have
proves what I was
risen
saying yesterday.
41%.
Remember what I said that after
oil
you, I'm
prices
still in
have
my
risen
EVA, and after you
37%.
get past a certain point,
I can go on and on.
it's
but you
it's your
understand what I'm
minimum
saying
balance.
is energy
I just
has
lost
increased
5K,
substantially.
and I did not blow the
And I
account.
think one of the reasons
So
for this has been
now
additional
that kind
demand
of
as we've
confirms
come out
that
of
to
a
me.
pandemic.
That confirms that.
But the other part of this has been whether or not investors really want to go back in and
Oh, you talking about MFF?
additional energy
Mhm.
resources after
Yeah.
the president made the specific determination.
I
to
just
cancel
lost
the
5K,
Keystone
and
XL
I was able to get it
pipeline
all
on the
back
day that he stepped into
without
office.
blowing the account.
When he did that, he sent one heck of a message to investors about traditional energy
Oh,
and investing in
nice.
traditional
Yeah,
energy. And
actually,
how much- and the
I'm gonna
fact that
take that because
a
I'm.
$1 contract or
said what?
contract could be canceled with the stroke of a
You
pen.
already had profits in there?
Now,
Yeah, there's still an EVA that I'm.
My
that I'm
question
trading.
to you is, what percent or
Which
has
account
been
size?
It's
about
150K.
what percent or what amount of the inflation that we've seen,
Oh, okay.
20%
So how much?
increase?
So what, you had 5K in there already?
How much of
Nah,
that is attributable
honestly,
to the demand side? How much of it
I had
really is
about like
attributable
6K,
to
6 to
supply side
7K.
challenges that we've seen in this country?
Yeah, because I'm only down like $800 right now.
We've thought
Yeah.
about a lot, and you.
So I had like
any
I made up to
attempt
6,
reduce
7K.
that
So I'm
to a
only like
precise
2K,
number
or I
would be,
was 2K away from passing.
inappropriate because it's so
Um,
uncertain. But I think we can say I
But
believe
now I'm back to
strongly
break even.
there's a significant demand element. And there's a
I'm gonna take
significant
some of this
supply element.
off.
And we've seen the
I'm
supply
gonna take
side
some of it off
heal so much over the course
because
of the last
I
year.
don't
So we can clearly
necessarily
see that
need to
that's
be risking
contributing
this
to lower
much.
inflation.
I mean, I got
We
majority of
also
my
see
money
cooling
back.
demand, for example, in the labor market. So the two forces are working together.
All right, so
can't
I
really
can
break
fuck
it
with that.
down.
I can do this.
It wouldn't be.
I can
it would
work
be
with
such an
this.
imprecise estimate. I
Just
hate to
simply
say.
just
can
simply
work
an
with that.
acknowledgement, though, that it is both
It's
demand.
both. It's definitely.
And
It is both. Yeah,
thank
for
you.
sure.
Thank you, Mr. Chairman.
Aye.
Time has expired.
Because I'm thinking that they might try to. Yeah,
Has risen by
it looks
half
like they're
percentage
having some
point over
trouble
the
here
past
at this
year.
40
The number
level.
of job
So
openings has
I just
dropped
kind of want to get out a
almost
majority of this
50%. The
so I
hiring
can
quit
scale
rates
back
are now
into
below
this because this is the
pre-pandemic
NASDAQ. It's
levels.
not like
I'm
it's
concerned that if
ES or
the Fed
nothing.
waits too long to lower rates, the Fed
Yeah.
undo the progress we made on creating good paying jobs. Full employment is part of the mandate, as you say over and over. How are you assessing the risks?
Hey,
of
don't come
higher
at Powell
interest
like
rates in
that.
the
Don't
labor
come at
market?
Powell like that. Don't come at Powell like
completely
that.
agree with your characterization. That the
Oh, what do you
latest
say?
data do show that we've had
He says
considerable
that
pulling
we
in the
all
labor
know
market,
blah blah blah
and
as
we
you
do-
say
we're
all
very
the
much
time.
aware
Like,
that
okay,
we have
don't come at me
two-sided
like that.
risks now, as I
Your
mentioned,
401k is
earlier.
in my hand, motherfucker.
And
So
we're
Powell was
determined to
thinking.
balance those as best we can.
I
We
can
wanna
crash
see
this shit if I
more
want.
good inflation data. We
You
also want to
really
continue to see
could.
a strong labor market. And those two things are equal under the law. We have this challenging thing to
Oh,
balance,
man.
but we're very much conscious that that is our job, and we're trying to do
That's
that.
too funny.
Well, and you know that if unemployment trends upward, you must act immediately to protect America's jobs. Workers have too much to lose if the Fed overshoots inflation target and causes
6K day.
a recession.
I didn't
Say that
It looked crazy
and over and
earlier.
over again. I think you
But I held the condition.
housing, higher interest
That was
rates are making
wild.
housing more
6K day.
affordable. Higher rates are supposed to
Okay.
lower the cost, yet housing prices continue to soar. By keeping rates high, the Fed ignores the economic reality of the millions of
No, good thing.
Americans
Hey,
struggling to make ends meet and get ahead. Let me
I'm glad you
ask a
took
quick yes or
a
no
lot of that
question,
side.
if you would answer that way.
Yeah.
Since late 2022, when the Fed began raising rates, has the volume of housing
Something
sales
crazy. He had to say something crazy.
I believe it has, yes.
since late 2022, has the median home price increased?
You got the scale back
Since
in.
late 2022,
Yeah, this golden
have
zone.
mortgage
Stops.
payments become more
Yeah, dude, I don't
affordable
know
or
what's
less
going on with
affordable
that.
for home buyers?
Less affordable.
Like, dude, I
Thank
definitely
you. In
don't know what's
short,
going on with
despite
that.
housing sales declining, the median price for a single home, single family home has increased by nearly $20,000. People are spending a greater share of their income in mortgage payments. So in some higher rates, it's clear higher from your answers and data, it's clear higher rates are not bringing down housing costs. The cost of home ownership is only going up. Let me shift to the Synapse bankruptcy. Since mid-May, tens of thousands of people, including many Ohioans, have lost access to their money due to the bankruptcy of this fintech middleman. Reports indicate that as much as $95 million may have gone missing. The Fed oversees one of Synapse's former partner banks, Evolve Bank and Trust. As a regulator, it's your job to make sure that banks protect the people whom they serve. What's the Fed doing to help customers who felt the impact by the Synapse collapse? What are you doing to regain access to their money?
We do supervise the bank. We don't supervise Synapse, or let alone the fintechs that feed into Synapse. And we're strongly encouraging Evolve to do whatever it can to help make money available to those depositors. We also, as you may know, did an enforcement action against, before this all happened, we did an inspection or looked at Evolve, and we hit them with an enforcement action around these very risk management issues, again, before the current situation developed.
Okay, it's critical that consumers are made whole as soon as possible. We will continue to talk to you about that. We will watch. We will let you know we're watching. The Fed needs to use its supervisory authority to ensure that Evolve is committing the resources necessary to return those funds to the account holders. Last comment, I want to note one last thing. Last year's Fed report on the failure of Silicon Valley Bank noted how incentive-based compensation encouraged excessive risk-taking that led to the bank's failure. You either watched or had reports of when those bank CEOs testified in front of this committee.
They having trouble with you on that.
Yeah, no, I see that.
The incentive-based compensation.
All they need to do is run this
that
shit,
led to
baby.
the
That's
bank's
it.
failure. I
Run
mentioned
it.
it said that SVB
Come on, Bulls.
managers
Get regarded.
had a financial incentive to focus on short-term profit over sound risk management. That's what a number of us, Senator Smith, Senator Butler, Senator Warner and I have said over and over, that short-term profit over sound risk management causes significant problems to our financial system. Compensation practices still pose a threat to our banking system. I urge you to move quickly to join your colleagues in the long overdue rulemaking on executive compensation. I mean, you read the reports at the outrage of the public about executive compensation continuing to go up.
Oh yeah, congratulations on your
You have
on
a
your
role,
data.
a significant
Congratulations,
role, a
Joe.
legal role to deal with that.
Try not to jump back in. Please close your charts and try to lock yourself out. Please lock yourself out.
How you know? I'm sitting here thinking about a log too.
Please close the log. Please close yourself out.
Releasing the results of
All right,
the
Joe,
QIS.
I'm about to go. I'm about to close everything out and
The
stuff.
results of the QIS.
You're right. I do need to
Well,
quit.
First, we
while
have
I'm
to get
ahead.
away
I
with
think
the other banking.
I'm not
agencies
necessarily in that
as soon as
euphoria
possible.
state, but
Can you imagine?
No,
any
you're in
agencies
euphoria,
like
dude.
Tier and
any other banking
You're
agencies
there.
concerned with
right there,
releasing
though.
Or is it just a
Yeah,
matter
you're
of-
there.
Okay.
You're in
No, it's just a
euphoria.
matter
If you
of
think
the
about taking a
bigger
long
picture of getting
right here
agreement on the
for more,
revisions to Basel
because you're
III.
thinking about, yeah, that 10K
That's
day.
great, and I really appreciate.
Nah, take the payout, bro.
The feedback that I've received from you. I should have started by thanking
you don't
Ken
know.
for your continued
Nah, you right,
accessibility
you
and
right.
discussions.
Nah, close your
They're very productive,
charts.
and I appreciate that. Your leadership of the Fed.
Nah, because I see the
I
potential
grew
of
up
it
in the
getting
70s.
back at least
Dude,
into the
Got my
60s.
I know, dude.
Social
That's what I'm
Security
saying. Like,
in
it
1973
could get
when
there.
I was 12 years old. That's when I made my
We just don't
first
know how
payment.
it's
So
gonna
I've been
get there.
following the
Yeah.
economy even as a youngster.
Yeah.
And that was a really lousy time.
All right,
10 or in the
all right,
workforce.
The
Tell
stream.
me, and I'm hearing
is
discussions
done.
among
The
some of
stream
our
is done.
members now that would almost
He's
be
right. He's
reminiscent
definitely right.
discussions with prior
being
Fed members saying
Of sound
we got a
mind when
lower
it comes to
interest
me.
rate.
But when I try to tell him
we've
something,
got
he don't
inflation,
want
we've
to
got
listen.
unemployment out of control.
What are you talking about?
So it sounds like we're taking substitutions from some of my colleagues or plays
One ear and out the other.
didn't prove to be very effective back in the 70s. What can we learn? What would I'm not
come
gonna
on,
ask you about
Bulls.
where you go from here.
Come on,
But
Bulls.
If
Come
we
on.
look back into a post-mortem on some of
Maybe-
the
are they-
decisions that were made when we had
This is crazy right
consistently
here.
high
Staying in the
inflation
middle.
and we had the
And this is
inflation,
this
I should
purple
say, we
line
had consistently high
mid-price.
employment.
Yeah.
What
7.
lessons can we learn there, or what
Like,
mistakes should we not?
Do they want to
necessarily
take it down
I know
further to go back up?
That this is a finger
Or do we?
of a challenge. It's not exactly
I would hope
like
not, man.
the stressors
For the sake
that
of this
we had
position,
back
I
in
would
the
hope not.
70s. But what can we
A lot of
learn
red.
from the
I would hope
decisions
not,
that
man.
I think were arguably the wrong decisions made back then when we were dealing with high unemployment
60,
and
92,
high
75.
inflation? What
Damn
did
it.
we learn?
I think the number one thing
Glad I didn't take
was
it.
that
They're struggling with
central bank
you, so that's
and stick with it until it's
Yo.
and that doesn't sound
My
controversial.
charts
but
is
it actually
frozen right
was
now.
back then, and so people
dang.
didn't really get in there and get it
Okay.
done, and it kept inflation kept coming back.
Damn.
I also think there are significant
Even-
differences
Damn.
this time to the question a minute
Dang.
ago. This is a combination
Dang, Bryce.
of a supply
Dang.
side that
So I don't know if
very
80
significant supply shocks
Oh,
along
yeah. Limit
big
orders.
demand shocks from the reopening of the
Pre-market.
economy and from all the other things that
Damn.
happened. So
Crap to the
I think we have to.
Did not
Each
think
one of
it
these
was gonna
things is different in its own way. We try to learn the lesson.
Balance up
You
the
agree or
golden
disagree?
fib so far.
Any disconnect
Oh,
between
my chart,
inflation
my golden fib.
and inflation expectations from the 2% target should be addressed now? Later
Wow.
time?
Absolutely.
I like that answer.
But
I want to go to something different. I'm
This,
trying to go into
struggling
a lightning round now and finish on time.
with,
Just
struggling to clear
we've
this.
seen the 2024 stress test results for the banking, U.S. banking system.
Yeah,
It's
I can't.
looking to me, by every objective measure, we've got
Close
a
it.
banking system that's on strong
Position
financial
again.
footing.
Still in profit, right?
Do you agree?
Somewhat. Some of my contracts are negative.
One last thing is the Fed considers
I
making
think,
Close it.
changes to the Basel III.
I'll keep my stop underneath this fib level.
Can I
about
urge
a
you
couple of
not
points
to
underneath this fib
overlook
level.
the second order issues, important FBOs and some regional.
Because it could,
to ensure the
yeah, I know.
Double
the
bottom
banks are
this.
not
I know.
unduly
That's what I
influenced.
hate. That's what I
Yeah,
fucking
if
hate.
The current proposal, for example, the outside
I would go
operational
long.
risk cost
Go
were
long down there. From
we're
like
going to take care of that
670
in
to
any sort of
680.
proposal.
Let me just say we're very conscious of the
I think
Man.
that's what the Bears
across the spectrum, foreign
Hold on, let me
banks,
turn this chart
domestic
trader
banks,
off because I
small,
can't even see
medium-sized banks,
anything at this point.
Everyone's
All
going to
right.
get heard carefully as part of this process. That
Okay,
is
so
our
no.
obligation.
I think
And I think in
Yeah, I
response
think-
to,
I think we're gonna-
Senator
I think we're gonna
Round's
go from
question,
here.
You did indicate there's probably because of the nature of the likely
We'll probably
changes
go
from
from here.
what Mr. Barr expected to
We
what
need
may
to break
ultimately
this
come. We are going
mid-price
to
in
open
order
up the comment.
Yeah.
like
That's the
get a whole,
view of the Federal Reserve. We're
at least above
on that
725.
question with the FDIC.
Yeah.
Really, you
to
need to
try
see a
find a
break
path to do that.
very strong over that.
That's
But
essential.
I think
They've been
it's a strong
struggling
view
there.
from at least several members on
We
this
got the
side of
first
the dais.
VWAP
I hear
break.
that would be very, very,
well, actually, this was the
because I
first
think it's going to
tap
materially change.
drops.
Thank you, Mr. Chair.
You got that push over it.
Senator Warner of Virginia's recommendation.
Sellers came
Thank you,
in
Mr. Chairman.
aggressively
Chairman
at
Pat, good to see you
740.
again, coming this late in the question.
Yeah, I think they're trying to double bottom this, bro. Or take it a little
At least hit a couple
even
of
further
items
to the
that
lows,
my
3
comments
months low.
otherwise already hit.
So if we get down to 680,
It's noted that I raised them as well.
that'd be a
First of all,
perfect
I'm
double
agree with the
bottom.
Chairman, you know, I probably hear more on housing,
Literally, that's
affordability than any
price.
other issue. And
Yeah, I see
I
that.
agree with the chairman.
I see that.
I know we've discussed this around a rate cut, and I understand
Or
most of you.
the Bears be weak, you
still
give
wanna
it up.
add my 2 cents here. We got
I mean, if the one time where I really want the Bears to be fucking weak right now, the one time,
And again,
the one time
issue, and I know
when
you
I'm
gotta
over
navigate
leveraged
that,
long,
but I hope
the
it's
one
sooner than
time,
later.
excuse me,
I will
they
not
want to be rainbow bears, man.
recap what I've done
All right.
in the last couple hearings with you.
So I
but
mean,
do
this
think
could
the
be a bull
discount window
flag.
proposal that I've gotten that I know you're working on, before we
This could definitely be a bull
think about
flag right
additional
here.
regulations, and we do need in some
And we
cases.
could see
I
a
think
pop,
the discount window is an
but
underused tool. Was one of the initial.
the Bears
Yo,
are
low-key,
definitely coming in.
A lot of my colleagues have talked about quantitative easing.
Low key, your
when
chart,
positive
yeah.
three in game. I do hope
But look
when
at
we
the
get
bigger
the revisions
picture. I feel like
that
that's
we'll see the
it's in
quantitative
a
analysis.
downtrend on your chart. Like,
Senator Tillis
Yeah.
already.
you go back.
Oh crap.
Other colleagues have
what the hell?
raised. I also hope that one of the questions I
Let me look
raised
at the
in
hourly
Mark's
chart.
letter to you was,
Look at
making
that.
sure
Yeah,
any
you're right,
regulatory
man.
structure, how it
You're right.
intersects
You're
with
right. Look at that hourly chart.
regulatory structure and
I got no
Uh,
skin in the
risk,
game
credit
right
risk.
now. See,
And I hope that we will
close the position, bro.
as the revisions.
Close it.
I
leave
can't
it
do that.
long.
I
I
think one
can't
of
do
the things
that.
that
I'm too deep. I'm too
debate
deep.
around
I'm too
positive
deep. I'm too deep.
Bro.
raised was that
I can't do
Oh
that.
my
it is
gosh.
my
I
understanding at
can't.
least.
I can't do it.
You may be all looking at
Wouldn't you rather
revisions
go
of
long
liquidity standards as well.
in this zone
And
from 670s to 680s potentially than
whether that
catch all that upside?
those standards are under
I think, yeah.
what your thinking is.
Yeah,
Okay.
I mean, the Bulls,
actually
they
connects
keep
to
coming
the Silicon
back.
Valley Bank
They keep coming
questions as
back,
well,
dude.
Where I think
I got too much hope on the line right now.
Assumptions about
Too much hope.
liquidity.
I know
And
you're in a hope
that's
being
a
state right now.
also working
Yeah.
on. And very important.
I'm trying to be.
That run.
No,
was
I'm
just
listening. I'm listening. I'm listening.
really
I'm
faster
listening.
than prior runs. That's the new world. And
In order for this to be
some
successful,
estimate of what that world
I think
is
they need to hold
into
above
things
at
like
least 725
the
minimum.
liquidity
Mhm.
coverage,
Hold above
for
that.
example, and
Right,
other-
in
But
what
in looking at this is still in a
25
downtrend.
cents
The
on
Bulls haven't came back and done nothing
6
yet.
hours, no
Yeah,
matter
they
what the
haven't.
credit standard is. And one of the things I guess, there was a lot of talk.
If we're just
after
going off of this, but
that we need to
this
think
trend
about
line here,
internet-driven runs.
draw that like that.
A lot of us raised concerns. Candidly, I'm not sure I've heard any good.
Like if it rejects the,
Whether it comes from you guys or from.
it keeps rejecting
how we think
715.
about this new internet-driven world, and frankly, I think some of the
Okay, you got
irresponsible
some buyers coming in.
by some of the
Tesla,
folks that were
Microsoft.
major depositors in SVB who.
Come on, baby.
Yes.
Come on,
shouted
baby.
fire in the
Just
crowded theater,
pump
and we've
past
not
this.
seen any
Yo, if we
action
can get a
there.
pump
So,
past this, we good.
I would welcome additional ideas.
If we get a pump past this, we good.
And kind of brings me to my last questions around supervisory.
Down,
I know the
dropping like
GAO
hundreds of points up there.
criticized the fact
Pumping.
that supervisory procedures in the role
Okay.
played in the 2023
Okay. Yeah. Okay. All right.
failures.
That's a strong candle. If we can get past this, we
It is a
good.
whole brand new
If we can get
world.
past this, we good. Come on, baby. Come
Are
on.
we
Close
gonna
strong.
look at
Close strong for your
will
boy.
you
Come on. Don't do
change
that.
those supervisory standards be
Bro,
comprehensive?
I hope
Will
we
it
have
be
a trade.
one-off? How
Close it.
think about
That was a
in
weak
light of
close.
the-
Dude, I
with
can't
and
close
also
it,
in light of
man.
Just the
I
SVB and
can't.
the few
I
of the
can't
other
close
issues we
it.
saw
I
last
can't.
year.
I can't do
Vice
it.
Chair Barr
I'm too deep.
who's Vice Chair for
Dude, I'm too
Supervision,
deep in this.
is leading a
I am
process
too
of
deep.
looking
It's only
an hour at the way
Bro.
No, dude.
thinking about
My
how we can
average
be
entry is right there, but that's not my average entry.
where it's appropriate.
That
more
is not it.
forceful
I'm
where
too
it's
deep. I'm down
appropriate.
like
I think they've
No, I'm
taken
too
a pretty deep dive
I'm too deep.
and
Can't do
tried
it.
to learn
How
these
much are you
lessons
down?
and then implement
I
them
can't
in a
say
way
right
that
now.
is,
I'll say it
appropriate.
at the apex. I'm just too
That's
deep.
a big project going on at the Fed right now, which really Vice Chair for Supervision leads.
Bro.
I think I remember lots of conversations with the chairman, with you, with
Man,
the
dude,
FDIC,
shut
and
the
that
fuck up, man.
Thursday
Let Powell
through
say
Sunday,
something
I
so the
think
Bulls can pump this,
solution you
man.
guys came up with, the
Damn.
administration came up with. It's not even it was a good one, but they were scary 3 or 4 days there, and it did seem like a process. I don't know completely how you get fully ahead.
Ain't that your governor?
Who's
I
that?
firmly believe that there should have been a
don't know.
No, that's not
early
a.
warning system, and trying to
That's
make
not
sure
Abbott.
that we wouldn't be in that kind of crisis situation
Come
going
on,
forward.
baby.
And again, I would strongly encourage just to focus on this technology risk and how we get that right. Thank you, Mr. Chairman. Thank you.
Takes an order. Senator
Hey,
hand is recognized.
Alfred, he don't want to listen to reason.
Dude, I'm
We
listening.
have
I
not-
keep saying that I'm in too deep.
Mr. Chairman,
I'm in too deep. I can't do
economy is
it.
slowing.
is it not?
I'm in too deep. I can't
Yes,
do it.
although still growing at a solid pace.
No!
Our unemployment rate
See,
is right.
it would have been less pain.
Yes, it is, although the labor market is still strong.
Yo,
Our labor market.
you gotta hope it.
Ah, man, come on, come
Yes,
on.
but I'd say unemployment is still, is still low by historical
Yeah,
standards.
at this
but
point
yes,
it is.
We've seen cooling, yes.
And I was looking at the
Fools.
recent
If I
job
need y'all to be
numbers.
regarded, this is the time.
I
This is
know you
it.
glanced at them too.
No,
No.
About
No.
3/4
who
of the
don't
net new jobs
be listening to
in
reason?
June were in government.
All right, man. All right.
healthcare,
Okay.
and
All right. So
social
this is it.
What does
This
that
is
tell
it.
you?
87.
That's a concentration. You'd
Oh
rather see
shit! It turned
broader,
orange. Damn it!
job
Oh,
creation.
it turned
than that.
orange. It
Those
turned fucking
three
orange on me.
areas have, in some
Okay.
reports, they've been, as it was this time, they've
This isn't a downtrend, bro.
creators of jobs.
It's ugly.
That
It's
tells you
not
that job
clean.
creation's becoming less
Yeah,
broad.
they might try to double bottom
narrow.
It tells you that government's creating those jobs, doesn't it?
Well, it's government. It's also in-person services. It's also.
Oh, I hate this bitch.
some of
Oh
it's
my
government.
god, I hate that. Oh my god, you saw what she
Yes,
just
many
did.
companies are not
Oh my
creating a lot of
god,
new
this
jobs
bitch.
these days.
Information technology.
Oh my god, I hate this
the past 2
bitch.
years, hasn't it?
Like,
I don't know.
Leisure and hospitality. jobs
yo, I hate this bitch.
That's a place where,
he's
there
still.
was a desperate
fuck.
worker shortage, and they've done quite a bit of hiring, but they're catching up now.
I mean,
Yeah.
3/4.
Oh my god, you saw what she just
being
did.
created
Oh, this
in
bitch.
our
saw that,
economy can
but-
be related
Oh my god,
directly
she's a bitch for
or
that. She is a bitch for that.
to
Oh
our-
my God,
our
she's a bitch
spending
for that.
deficits, can't they?
Oh my god. All right, so now I gotta do some. Hey, I'm
In this
probably in the
report,
market all day,
in the
bro. I gotta get to the
report, I
bed.
don't know that
Gotta get
healthcare
it
is
back.
really government spending. That's
Of course, I think these hospitals get their money.
they make.
Oh my
people
god, she's a bitch for that.
spending on.
Oh my
spending
god, she's a
on
bitch for
healthcare
that.
is not necessarily directly related to deficits.
Oh
That's my
my
point.
god, she's a bitch for
You
that.
just
I
gotta
would
take it.
disagree with you.
Oh my god.
You just gotta accept
Ah.
it, bro.
I mean, here's my
Nah.
point. We talk a lot about
We getting this money. We blowing. Oh, it's either we passing the account or we blowing it today, baby. That's where we at.
expect there to be inflation.
That's where we at this point.
No,
Getting
that's wild.
It seems
No.
to me that consumers
Think about your journal.
a bigger
I'm in that journal right now.
Think about your journal.
than we see. Most of our economy in America is consumer driven, is it not?
Yeah.
Yes,
Unlike, say, China, which is manufacturing driven.
very much so.
Oh, man.
Listen to you cite
One mistake.
the statistics about
That's what
the
one
economy.
mistake did, man. Fuck.
But most Americans, most
Okay.
Americans
All
don't
right, so
feel
let's
good
look at
about
this,
the
man.
economy, do they?
665. That
No,
might
and
actually
we
be the
don't- we don't
fucking
tell
area that they're
people
trying to
how
get
to feel
to.
about the economy.
Shit.
I mean, isn't it a
Mhm.
fact that most people, if you
Where did you say?
ask them to define,
They're probably trying to get to
back
665,
They would say
660,
that's easy.
665.
we
That's
get
what they're
to
trying
pay
to
more
probably get
live
into.
worse.
Damn.
Bro,
I wouldn't touch a.
I was saying, wouldn't
wanna
you
answer
rather go long down
that
there
word in.
versus, but like in at least the
I mean, we
80s
can
if they
pretty
double
good stuff
bottom it
all
at
we-
680,
I guess my point is,
81,
and I know you're going.
or if they go for the
do this anyway,
lows,
but I
you know they're
don't
gonna
really
probably
care about this.
overextend it a little bit.
I
Mhm.
mean, people just don't feel
Yeah.
better off,
The bulls come in.
and one can marshal a persuasive
Damn,
argument.
man.
Well,
Damn.
you're good
I can't.
compared to Europe,
I gotta go, bro.
compared to
I
China.
tried to tell you.
No, you're good, man. You're
And you
good.
short now too?
But
No, I'm
they-
not short. I shouldn't be short.
Feelings are feelings. People don't
No,
feel
I'm
good
not.
about this economy,
I shouldn't be short.
and it's primarily because of.
No.
You sure? That's red.
Let me use my final 30 seconds.
That's showing red. 26.
No,
I'm
because
listening to my good friend, the chairman, give his
this
opening
average entry is
statement.
wrong.
Do you
Hold
think
on.
inflation was caused by
Am I
corporate
short?
greed?
Yo, you're short.
How?
You're short, bro.
I hate to
How?
comment on something that
How?
Chairman
How's
short.
like, dude? What the
about.
fuck?
You're short.
Okay, let me just
So-
close this damn thing
I
out.
would
Man.
just
Let me
say-
just close it out.
We see at the Fed, we see inflation.
Wait.
as,
You might.
when there's
It might pay off a little bit
supply
if
and
you.
demand. And
Nah,
use our
you're right.
tools to work on the demand side of that. and bring
Yeah,
it
what the
back in
fuck
line
was
with
that,
supply.
man?
I got
Damn.
2 seconds. So when are you going to lower interest rates?
What the
I'm,
fuck
I'm
was that, dude?
today not going to be sending any signals about the timing of any future actions.
Thank you, Mr. Chairman.
You know what's
Sarah
probably
Smith
what it
of
is? It's
Minnesota is
because these
recognized.
damn
Thank you, Mr.
orders
Chair. Welcome, Chair Powell. It's good to see you
aren't
again.
canceling out.
I want to follow up on kind of the
Yo,
line of
that's
questioning
crazy,
that
yo.
Senator
Like, what's up with
Tester
that?
was on a bit ago. He was talking about how the U.S. economy has been outperforming other advanced economies around the world in terms of growth rates, in terms of unemployment,
All right,
in
man.
terms of inflation.
I mean, you're
getting
good, man. You
inflation
gotta
under
go.
control, though
Man,
I
you
think
good,
we
man.
obviously can all agree that we're
You
not.
good. You good. You good.
Come back
From my
tomorrow.
perspective, we're not done yet. We don't
I
want to
know how
rest
you
on our
are.
laurels, but I'm wondering if you could share
I know
think that we
how it
learned from
is.
this experience. What have we done right?
Yeah, so I don't know why that's,
why is it that we are doing better than
I
some
don't
of
know
the
why
other
that's
advanced
there.
economies in the world?
I have no clue why these are here.
I think that it's down to the fundamental strengths of our economy. So, as you may know,
Just don't
European
get chopped
economic
up.
officials are very, very focused on this question. They really, it comes up in all of our discussions.
Really feel like slow action.
Europe
right now.
has seen productivity
Since
increases
we
of
passed
about
10 o'clock.
1% a year for 40 years. We've seen 2%. If you take a number and at 1%, then at 2%, the difference is just enormous after 40 years in terms of incomes and living standards. And why is that? Why is that? And the standard answer that Americans tend to give, and
Alfred said the new term is he's on full serve.
in the pandemic, people they stayed in their existing jobs. In the United States, we had people changing jobs at record levels, and that's the kind of thing that adds to productivity. And
This is a slow grind
going back
down.
to school, getting
Yeah, I see that. Yeah, I
Another
see
one is
that.
our financial sector.
I think what's going to happen is I'm probably going to get filled on these.
Highly developed
I'm going to have to close them as they get
ecosystem
filled.
of financing sources that will fund early stage investments. Banks are really not.
Yeah,
set
I
up
mean,
to
that's
do
crazy
They're
that these
prudential.
orders are just not
and
canceling. Like,
those
what's
are
up with
some of
that?
the things. I think we just have
All right,
these
so,
natural
yeah, I'm in
strengths
short.
as as an innovative, more flexible economy.
I'm in short.
In short, we're at
No.
I
It's
think
these
sometimes there's
these
a
orders are
tendency to
filling,
sort of
and
trash our
I'm getting
economy
in
and to
short
sort
because
say,
of it.
we suck. And actually, I think that there's great resilience in our economy. I would argue that it has also to do a lot with the incredible resilience of our
MFFs.
that's crazy.
and their creativity
Oh,
and
that
their
fucking-
talent and
wow.
the training and the education that they have. And I think I would also argue, though I wouldn't expect you to make this case, that the way in which our federal government responded.
Yeah,
to
so
the
I'm gonna try this.
pandemic,
I'm
in
going
order
full
to
port
make
at
sure that
660,
people weren't
bro.
evicted,
I'm going
that they
at full
had,
port 660.
They still had money to pay
660.
their bills even when they
Full
weren't able
port.
to work.
Because I'm thinking what they're gonna probably do is once
Overall, our
Powell gets done
economy,
talking and we get this stop run down, which I
survived
already
in
know,
and was
with
ready
that
to
6
kind of go
or
off to the
what level was
races,
it?
when we emerged
It was
from the pandemic.
580. But
Chair
they
Powell, I'd
may
like to
hold it
ask
at
you a
680.
question,
They may
something
hold
that
it
you
at
and I have talked
680.
about. I continue to be thinking a lot
But,
about, which is the
I
commercial
think
real estate
realistically,
risk that we have in
they're
this
gonna
country.
try to
I
go
think
for VWAP.
particularly,
That 660
for
level does
office
look like
space. We know
support.
that has been under strain the last several years. The sector has remained largely stable, but we are hearing about some additional default risk. And one thing that I'm noting is that there's some expectation or concern that may fall disproportionately on smaller banks. I think that commercial and regional banks hold an estimated 2/3 of all the commercial real estate loans in the country. And so unlike larger banks, smaller institutions might find it a little harder to deal with this.
Let me get my full port
Discuss
position
this with
ready.
us. Could you tell us a little bit about how you see this risk?
Dude, I can't believe I did that, yo.
particularly
It
whether
all
this
started
poses
from
some
see,
additional
that's that self-sabotage shit,
risk
man.
that we might be seeing more concentration in the
self-sabotage
banking
shit.
sector as these smaller
Fucking
banks
swear.
may be under more pressure.
So anyway, so what
this,
happened?
to your point,
I
this
was
is a
trying to
risk
get
that has
in
been with us
and see what happens
will
in my
be
see
with
what
us for
happens
some
account.
time, probably for
But
years.
for some
And,
reason, I
banks
clicked on
need
my
to be,
account that I was working
honestly
really hard
assessing
in
what
and
their
building
risk
it
is.
up.
They need to be assuring that,
And that's why I just couldn't close it, because all that
and
work.
the systems in place to manage this risk. The stress test
Man.
that we apply to the largest institutions, stress.
I can't do that, man. That's too fucking high. That's
And again, the
Damn.
conclusion is that the large banks
too fucking high, dude. That's too
can
high.
manage this
That's
problem.
too high. That's too
And
high.
most small banks can too, but it is
That's
in
too
some
fucking
smaller
high.
banks
And then my
that
screen is
tend to have
frozen.
that local
Okay.
concentration in
That's too high.
in commercial real estate.
So they
we're
basically
in touch
double
with those
bottom
banks.
this.
The supervisors and regulators are in touch with those banks, and making sure that they can manage them.
Dang, that's what I was going to say. Be careful in that. I was just about to say, be careful in that double bottom.
Very much aware of, and
at 680
with us for
681. Thank you. I think so much about the importance of this regional community banks, small towns, even big towns in Minnesota, and how
they broke the trend line down.
In my book, they can stay
take over now.
And better serve the community. I worry about this risk. Thank you, Mr. Chair.
Thank you, Mr. Smith. Senator Butler of California is recognized.
Thank you,
oh my
Mr.
God,
Chairman.
these people still talking. Let this man.
Chairman, good
let
to
him
see
let him
you.
go. Y'all wasting his time.
I am
Shit.
gonna use the whole last minutes since I'm the last one for today. You'll recall.
All right, that's the last one for today.
To engage you around 3 specific areas.
Oh my God, dude. All right, dude.
How the monetary policy impact the quality of life for young Americans in the future, and the work that you are doing there. The space of climate risk.
Oh my God! What the fuck are you asking this man about climate for? He's a Fed. What the fuck?
And that is
asking him about fucking climate questions and shit.
You and I've had that.
What is wrong with these fucking people?
No surprises today. I'm gonna stick to.
Yeah, we're gonna address some monetary policy to lower
questions that you've been
the temperature of the world.
Relative to the housing
why are you asking him this shit for?
And interest. I want
to do it. Yeah,
it has nothing to do with what he does.
Those issues and challenges impact again the quality of life for next generation. Given the severe shortage of affordable high interest rates, Americans are continually unable to.
All right, dude. I have no clue what the hell is going on right now.
Up. So there is.
Yo, what's going on?
Honestly,
dude, I can't close out of none of my positions, yo.
Recent Washington Post
I can't close out of nothing. What's up with that?
More on housing than their millennial counterparts. Where
even the exit and cancel all button don't work.
Dude, it's not working, yo. MFF, this is that bullshit that people talk about, man.
How do you
that bullshit, man?
View the interest rates of today and the monetary balancing, policy balancing that the Fed is doing on contributing to the future generation predicament if we are to extrapolate the conditions of today?
So our job, of course, is the whole economy and inflation for the whole economy. And the absolute best thing we can do for younger people is to restore price stability so that as we benefited
oh
from,
my God, dude.
I graduated college in 1975.
All right, so I guess MFF is at that point where it's like, yeah, we're going to get him.
Most of my adult life,
we're going to get him.
Has just been
like, dude, oh, okay, man.
And that
all right,
means,
okay.
You know, stable
all right,
interest
okay.
rates, relatively
whatever.
low interest rates.
All my orders are now just orange. It's going to just turn orange.
Job is,
like, what's up with that?
We're not supposed to look at the housing market
and then you can't even
from the overall economy.
I can't even close it.
There's no question that higher interest rates are making it harder to buy homes in the short term, but in the longer term, this is the best thing particularly for younger people who are not yet in the housing market.
Let me sort of in line with that community situation population, and definitely
I'm trying to stay on
with concerns of.
I mean, no, dude. I mean, you good, man. You good. I mean, either it's I'm already past that point to whether this shit's gonna work or it's not.
Wildfires.
So, I mean,
and our colleagues and fellow Americans in Texas and the impact of the hurricane. I wanted to. Pull in your sort of thoughts about the Fed pilot on the climate scenario exercise. In May, the Fed conducted a pilot climate scenario exercise and asked the banks to examine their balance and how it would be affected.
Yeah, I can't. I'm hitting the close and it's not letting me.
Facing data gaps.
Says operation failed, operation timed out, manually close your positions. Whoa, what the fuck?
How does the Federal Reserve invest in expanding
what do you think I'm trying to do?
Resources for banks that are implementing climate-related financial disclosures?
So we have
okay. So this is what I'm gonna have to do. I'm gonna have to disconnect this, dude, because that's crazy that these fucking
really
positions ain't.
Exercise, you know, how are banks
like it's crazy. Like
this?
what the?
How are they modeling it?
Yeah, you might.
How does it work?
Be better just to disconnect and retry your.
And so that was really the nature of this exercise.
Redo your
disclosures. You know, we don't really have a.
You see this
really
shit?
Our job. That's really the SEC.
That's crazy.
But you know,
imagine if this is my real money, man. Well, I guess I wouldn't really be
make sure that the institutions we regulate are aware of and understand the risks that they run, including risks from climate.
And that they're prepared and learning how to, as would be the point of a pilot, learning how to mitigate those risks over time. So what criteria will you use to evaluate whether or not you would run the exercise again and or share more broadly the results of the exercise?
My advice:
we did
close up shop,
most
come back stronger than tomorrow. You still got the accounts,
I don't know
right?
what to say about that. We're looking at it and we're asking ourselves,
Yeah, it don't gotta be done today.
what do we
can
need
get it tomorrow.
Next time?
Nah,
We can get it tomorrow, baby.
So
nah.
I'm not exactly sure what factors we'll be looking at, but we'll be doing a careful assessment of what more we need to do.
What news we got?
Thank you, Mr. Chairman.
Senator Haggerty's
Today was kind of outside of.
Thank you, Mr. Chairman.
Powell's kind of flat on news.
Welcome. Chairman, last week in Portugal, you said that you wanted to be, quote, more
All right.
confident that inflation is moving sustainably down before.
All right.
What time is it?
You also said
It's only
in your
like 10:20,
testimony
dude.
that greater confidence and more good data before.
Oh, dang.
Can
Yeah.
you give us any color
It's only 10:20.
as to what it is you're looking for in the data?
And stay in the market all day, but.
We need just to see more good inflation data. That's all. We had 7 months of good inflation data at the end of last year. Then we had a quarter, really a month or so.
All right, Joe.
Went up, and now
See y'all tomorrow.
we had one
dude.
really good inflation reading and one pretty good one. We just need to see more so that the confidence rises. I'm not going to tell.
Are we weeks away, months away?
Yeah, I mean, I'm going to try to avoid sending any really specific signals about time today because it's going to depend on the data. It also matters what's going on in the labor market, though. We've also said that if the labor market weakens unexpectedly, that could be a case for loosening policy as well. Really, we're weighing both those factors.
Here's one of my concerns. Yeah, I'm sure you probably share it, but we're coming off of a 40-year high in inflation. We've seen the rate of inflation coming down, but we haven't gotten to the 2% target. And my concern, for lack of a better term, is whether or not this might be transitory in terms of the data that we're seeing right now.
That's exactly why we're approaching this question carefully.
I thought that might be your answer. Thank you, Mr. Chairman. Can we shift now to the issuance of Treasury debt? The Fed is the largest holder of Treasury debt. In February, you and I talked about the pressures that our fiscal deficit is exerting on interest rates, which by extension makes your job more difficult. I'd like to talk this time about how Treasury issuance is impacting our economy and our monetary policy. First, just a basic question. If Treasury issuance were to shift drastically, either to the long end or the short end of the curve, would that affect interest rates?
Yeah, I'm thinking they're trying to get down here.
Do changes in supply across maturities impact interest rates on the yield curve?
I mean, I think in theory they can.
I agree. As you know,
why
the
are you
Treasury
asking
Borrowing
stupid
Advisory
questions?
Committee recommends that T-bills comprise between 15 and 20% of total U.S. debt. Right now, the Treasury is issuing T-bills significantly above that recommended range. Some people, including myself, believe that this is being done to artificially stimulate markets in the run-up to the election. And it's shocking how little attention this is getting. Any manipulation of debt management of this nature stimulates inflationary pressures and increases taxpayer burden because it's higher cost to issue these bills. So given that Treasury is issuing an excess of short-term debt, which pulls down longer-term rates, isn't it working at cross purposes with your monetary policy goals of taming inflation?
So we take Treasury's debt management decisions. We don't comment on them. We just do our job.
No, I'm not asking for a comment on their decision, but just as a simple mathematical truth, if they're pulling down demand on the long end of the curve, doesn't that?
I wouldn't say that has important inflation implications. No.
It just feels to me the same way that the Biden administration drains the Strategic Petroleum Reserve, that undermines our ability to respond to energy shocks. When the Treasury manages its debt in this manner, it constrains our ability to respond to future economic shocks. And that opens our nation up to very real risk, whether it be amplifying the effects of the Fed's balance sheet reduction, flooding the supply of one of the most important short-term debt instruments. The risks seem to me to be mounting for Treasury market disruption. I'd like to know what your thoughts are, Mr. Chairman, about how the Fed will navigate this and whether you've had discussions with the Treasury about this growing dangerous dynamic.
No, we don't have a seat at the table on Treasury debt management. Treasury makes those decisions, and they don't have a seat at our table on monetary policy.
I just think the risk is very obvious here, though, where we're headed with this type of portfolio
honestly
management.
it's completely out of bounds for me to comment on Treasury debt management. in any
Well,
way?
I think you've been dealt a very difficult hand here, Mr. Chair. The Biden administration's policies aimed to gin up the economy ahead of the election. These efforts directly undermine your policy goals at the Fed. That includes excessive issuance of short-term debt. Think about it, Freddie Mac's backstop of second mortgages, unlawful student debt loan cancellations, the draining of the Strategic Petroleum Reserve to suppress fuel prices, and President Biden's own jawboning of the FOMC to lower rates. As you know, the Federal Reserve was structured to shield monetary policy from political influence, and that independence has given the Fed unique credibility in executing its mission. If the FOMC were influenced in any way by political calculation rather than economic data, it would severely damage the Fed's credibility as an independent institution. It would increase uncertainty in our markets, and it would jeopardize the dollar's status as the global reserve currency. Thank you, Mr. Chair.
Senator Warren of Massachusetts is recognized.
Thank you, Mr. Chairman. When the CEOs of giant banks can boost their bonuses by getting the banks to take on more risk, they run the risk that they will end up running their banks into the ground. It happened in 2008 and it happened again in 2023. Back in 2010, though, Congress passed the Dodd-Frank Act. Section 956 told financial regulators solve this problem. 2 months ago, regulators put forward a proposal, but the Fed refused to join. Now, in 2018, you told this committee, Mr. Chairman, that you, quote, expect that banks will have in place compensation plans that do not provide incentives for excessive risk-taking.
My screen is frozen.
In other words, you trusted the banks to write their own rules. So let's see if they actually have. One thing the proposal would do is require big banks to delay bonuses for a broad group of critical employees who are able to gamble with the bank's finances, like the head of a trading desk, for example. Chair Powell, in the 6.5 years since you said trust the banks to regulate themselves, how many of the 10 biggest banks have put policies in place to delay annual bonuses for this broader group of critical employees whose risk-taking could endanger the bank?
I don't know specifically. My guess is all of them. Since the financial crisis.
You're the regulator who said trust the banks
Oh
to
my God, this
self-regulate
bitch is crazy. Yo,
so
shut
we can
up.
avoid another financial meltdown or another bailout. And you don't know if they did or didn't do that?
Well, you make it's a very, very specific, narrow question you're asking about.
Because it's something a regulator should do. You think the answer is 10 out of 10? The answer is 0 out of 10.
Yeah, I doubt that.
Well, go back and look, because we've looked at their statements on this. Another thing the proposed rule would do is require the banks to consider flat out banning bonuses and bonus pay for executives who took risks that threatened the stability of the bank. So let me ask you this one, Chair Powell, in the 6.5 years since you said trust the banks to regulate themselves, how many of the 10 biggest banks now have policies that would require them to flat out deny bonuses to executives that have engaged in inappropriate risk-taking?
I don't know the answer to that. By the way, I never said trust the banks to regulate themselves.
I'm sorry, do you want me to go back and quote you again exactly?
Trust the banks to regulate themselves?
When you say, I expect that the banks will have in place
okay, so bitch, she didn't say that.
compensation plans that do not provide incentives for excessive risk-taking.
Right, pursuant to the guidance that we issued in 2010, which is quite detailed.
And you have not issued a guidance since you made these comments, since you became chair. And how many banks have actually put in place the regulations that you said, I expect the banks will have in place? The answer is out of 10,
it was covered
0.
by the 2010 guidance.
No, you said in 2018 that they would put these in place.
I said they would have in place.
No, that is not what you said.
Oh my God,
look,
bitch. Shut up.
Powell, the last guidance on this subject, as you say, was in 2010, which is before you were at the Fed. The Fed has now refused to join the other financial regulators in finalizing a rule implementing Section 956 as Congress directed. So my question has been, how many of the 10 biggest banks have done this? And the answer is 0. Dodd-Frank was passed 14 years
Yeah, I
ago.
know, right? Like she's
there
just
are
doing too
still
much.
No rules to stop
I mean,
banks from rewarding
I mean, I understand that
executives'
she's on
risky
the
behavior.
left side, but you ain't
When
got to
you
be.
were asked about these Section 956 rules or lack of
You ain't got to
rules
be a
in
victim.
March of this
I
year,
mean, she's about to go
you
home to her
said,
mansion, and
quote,
she
that you
playing
wanted
victim.
to
Like she know the struggles of
understand
everyday
the
people.
problem
Like
we're solving
you don't know the struggles of
before
everyday people.
proposing a rule. Chair Powell, the law does not say Jerome Powell, in his infinite wisdom, should decide if we have a problem with executive compensation. The law passed 14 years ago says executive pay is a problem that threatens the stability of our
I mean, they're talking
economy.
about.
So write
She's talking
the
about
rules
banks
to rein
getting
them in.
bonuses. Like that is no, like, dude.
Finally, the other financial regulators
These banks don't really need the bonuses that they get. It's just an ego thing. They're going to get
Chair
paid
Powell,
regardless.
I
Like
understand why the 10 biggest
they're
banks
going to
in
get
the
paid
country
regardless.
like your approach. You let them
So
do
I mean, it's
whatever
a
they
stupid
want,
thing
but
to
you
even
don't
kind
work
of
for the
emote
giant
about.
banks. You work for the American people. I urge you to do your job. Thank you, Mr. Chairman.
Senator Vance from Ohio is recognized.
Thank you, Mr. Chairman, and thanks to Chair Powell for being here. I appreciate you coming by our office last week to discuss some of these issues. I would ask something I imagine most of my colleagues are not asking, which is the relationship
Yeah, I know.
between
I know it's a part of her
immigration,
act, but
particularly extremely
it's like,
high
dude, you ain't got to
illegal
be all
immigration
like
levels under
that.
the
I mean,
Biden
you're doing too
and
much.
the persistence of the inflation problem.
Man,
And I recognize
and you making
this
these
is not
bears
your
empowering these
policy
bears with your
focus,
stupid
but,
comments.
you are the Federal Reserve Chairman, so I just want to get your views on this. And in particular, I want to read you a quote from Mickey Bowman, who's one of your governors. And this says, in a quote, "There's a risk that increased immigration and continued labor market tightness could lead to persistently high core services inflation. Given the current low inventory of affordable housing, the inflow of new immigrants in some geographic areas could result in upward pressure on rents as additional housing supply may take time to materialize. With labor markets remaining tight, wage growth has been elevated at around or above 4%, still higher than the pace consistent with our 2% inflation goal, given trend productivity growth." The Bank of England, I believe, produced a recent report on this issue in the United Kingdom. Obviously, a different economy in a different country. But what do you see as the relationship,
Nasdaq, you ain't had to do that to me,
given that
man.
housing is
You
such
ain't
a
had
big
to do
driver
that.
of the inflation that we've seen over the last few years? As Senator Haggerty said, the highest in 40 years. What role do you see illegal immigration playing in driving up housing costs, which of course is a main driver of inflation for American citizens?
Let me quickly start by echoing your first comment, which is we don't comment on immigration policy, but we do comment on inflation. So I would say this. Many people came into the country over the last couple of years, many of them through asylum requests, and went to work. Labor supply increased a great deal. It's not, there's no clear answer, but my sense is that in the long run, immigration is kind of neutral on inflation. In the short run, it may actually have helped because the labor market got looser because there were more people. But to you're talking about housing specifically. There will be, I'm sure there are places in the country where new people coming into the country, I'm sure you can find places and they exist where that will have contributed to an already tight housing market. But overall, in terms of aggregate inflation, I wouldn't say it's a driver one way or the other.
So I want to follow up on that thread, but just on that topic of particular areas that have been affected. Chairman Brown, I'd like to ask unanimous consent to submit a letter for the record from the city of Springfield in our state, the southwestern part of our state, which I think highlights a very real example of this particular concern, straight from the horse's mouth itself. Now this letter, I want to quote from it. "Springfield has seen a surge in population through immigration that has significantly impacted our ability as a community to produce enough housing opportunities for all. Springfield's Haitian population has increased 15 to 20,000 over the last 4 years in a community of under 60,000 previous residents, putting a significant strain on our resources and ability to provide ample housing for all of our residents." And end quote there. And Mike.
No objection. So
thank you. In my conversations with folks in Springfield, it's not just housing. They're trying to build 5,000 new housing units, which is a very Herculean task in a town of about 55,000 people. But it's also hospital services, it's school services, there are a whole host of ways in which this immigration problem, I think, is having very real human consequences. But I want to go back to just one other question, Chair Powell, on this immigration and labor supply question. So one of the
Thank you.
euphemistic ways in which economists
You can get that first target
talk
hit,
about
then
labor supply
it should be good.
and immigration is they'll say
Thank
something
you.
to the effect of, well, an increase in labor supply has put downward pressure on labor prices. And what they're effectively saying is that increased immigration has put downward pressure on the wages of American workers. I wonder, when you hear sort of your colleagues and other economists outside of the Fed talk about the influx of immigration and the fact that it, I think, admittedly has put downward pressure on wages. Okay, so there obviously that has put some downward pressure on inflation, but it also puts downward pressure on the wages that people earn to pay for their families. Why do we see that as a good thing? Or maybe that's wrong. Maybe the premise is fundamentally incorrect. But why do so many economists treat an influx of new labor as a good thing? If labor is constrained, labor supply is constrained, doesn't that lead to rising wages for American workers?
So I'm certainly not trying to put a value judgment on it. I will say, though, this is all happening over the last couple of years in a context of an extremely tight labor market. Now a little bit less tight, significantly less tight, but you've got a worker shortage. You've got businesses who have jobs that are open. You have, more than one job opening for every unemployed person. So you've got a very tight labor market, and it's addressing that. And we're having wage increases are still very high, but they're coming down to a more sustainable level.
Fair. And Mr. Chair, I know I'm over time. Could I just one more question on this? Thank you. I understand your point, Chair Powell. And again, I'm not ascribing value judgments to you, but if we say we have a really tight labor market and we say that there are more than one job openings per worker, there are two ways you could plausibly solve that, probably more than that, but two obvious ways you could plausibly solve that. One is through a new influx of workers via the immigration system. Another way is by raising wages and bringing some of the workers that are on the sidelines. I think specifically of the 7 million prime age men that have dropped out of the labor force. Like, why isn't that more the focus of policymakers rather than, you see a labor shortage, rather than bringing in a large number of new immigrants, why not try to boost wages in a way that brings some of those workers off the sidelines? That seems to be a much better focus from my perspective.
Certainly, that's a very constructive focus. I would agree. It's not, I don't think it has to be one or the other.
Thank you, Mr. Chairman.
Senator Van Hollen from Maryland is recognized.
Thank you, Mr. Chairman. Chairman
Dude, how
Powell,
long is this damn
good to
thing?
see you. And
Hold on, how long is the
let me
testimony?
First, applaud you and your team at the Fed for at least so far being on track to bring down inflation without so far
look this up.
triggering a surge, big uptick in unemployment. But you know very well that that's a risk if the Fed does not act with full awareness of that danger. When you were here in March, you said that you were, quote, well aware, unquote, of the risk to unemployment of waiting too long to cut rates and, quote, very conscious of avoiding it, unquote. Since then, we have seen a slowing in the economy and a rise in unemployment. I'm just reading something today, an analysis with Diane Swank, KPMG's chief economist, who summed it up by saying, quote, the ice is thinning, red flags are emerging for the U.S. economy, unquote. The engine of the economy, the labor market, is cooling faster than previously known. The unemployment rate is above 4% for the first time since 2021. It is taking workers longer to find jobs. Economic activity in the service sector, which is responsible for 2/3 of economic growth, slowed in June. So my question, Mr. Chairman, is how do you take all of these factors into account? Are you?
It's not saying what time it stops.
That as of today,
So I'm
there is
guessing,
a real risk.
because they've already started at 9 o'clock. They're already an hour and 30 minutes into it. I guess I'm gonna make the assumption that they're going to stop at around 11 o'clock.
Yeah, I mean, absolutely. I do, even more so than in March when we were here, see that. So we've seen, and I think the latest data show that labor market conditions have now cooled considerably from where they were 2 years ago. And I wouldn't have said that until the last couple of readings. And I would say also that for a long time, the risks were more,
he has to speech tomorrow too. Usually how this game is played is the first day, the testimony,
price stability and
he's
maximum employment. I think those are coming
asked these
much more
questions.
into balance.
The second
My
day is
colleagues
usually
and
the
I
same round of
looking at
questionings for
that,
some
and we
reason.
fully understand that we have to manage
And that's why the
this,
market is usually not as volatile
process of
for the second set of meetings
administering the federal
versus
funds
the
rate
first
and
set.
deciding what to do with it in a way that manages both of those risks. And the two mandates are equal under the law, and so yes, we do get that.
Well, I appreciate that, and I appreciate the fact that you've seen that that calculation change since you were last here, because I think the data indicates that.
So tomorrow's
we
meeting
are
is
at
not going to be
risk,
as volatile to the market as
now
today's meeting is.
of not acting soon enough to curb the increase.
Or historically, that's how it's gone. I don't know if they're going to switch it up tomorrow,
and
but
if we allow that
for the
to
most
go
part,
too long,
that's how this game is played.
we may see a real uptick there. And so I'm pleased that that is very, very much on your radar screen, and hope that that will be
Dude, that's not even
really
fair.
deciding factor.
That's not fair.
As you and your other Fed colleagues determine what to do with respect to interest rates. And as has been said in the housing sector, we are seeing the continuing drag created by high interest rates. So that has been I think all of our colleagues, as you probably heard today, are really hearing from our constituents understandably.
I think that's a strong
about
candle.
Very high.
I can feel
prices,
confident in
and
that
it's
candle.
slowed investment in other sectors like manufacturing as well. In my final minute, I would like to turn to the question that Senator Warren asked, because I asked your colleague, Vice Chair Barr, about exactly this question of implementing Section 956 of Dodd-Frank when he was before the committee just a short time ago, May 16th of this year. And I asked him about why the Fed had not moved forward along with other agencies with respect to implementing what the law is and what the law has been for 10 years. NCUA has signaled their intent to propose a rule. The SEC has indicated that they're moving forward. I said to Vice Chair Barr that I've not seen any notice of proposed rule from the Fed, and can I get a commitment that the Fed will quickly begin the process implementing this law by issuing a notice of proposed rule? His answer was, and I'm quoting, "In discussions with my colleagues, it became apparent that at the board, we believe we need to conduct some further analysis before deciding what steps to take. We are committed to following the law, to implementing Section 956, but we have further work to do." Count me among those who are very frustrated that we're now 10 years after this law was passed. Vice Chair Barr committed to following the law. I'm sure, Mr. Chairman, you would commit to following the law. But why is it that it's taking the Fed so long to move forward with implementation of 956?
So I like to look at the actual language of the statute when and what it says is it calls on the regulators to make determinations about specific incentive compensation practices that cause excessive risk taking. And then, and we haven't done that. We did, that we put in place pretty serious guidance back in 2010 after putting it out for comment. We looked at all these questions. It's been in place for 14 years. We supervise on it. And, so the question I'm asking is, okay, let's go out and look at what the practices are that are happening now, not that are happening before the global financial crisis when it was obvious that things needed to be changed. And we put the guidance in place. It seems to have largely worked, certainly as it relates to the large firms. And then let's design something that is designed to the residual risk, as opposed to just taking something off the shelf from 15 years ago and doing that. So and we're working on that at the Fed now. And again, the statute requires us to prescribe regulations or guidelines to prohibit those things. And I want to do that. In a sense, we have done
just very briefly, and is it your testimony that the Fed has already met the requirements of site? Okay, no, just want to make that clear, and we do look forward to the Fed moving forward. Thank you, Mr. Chairman.
Thank you, Senator Van Hollen. Senator Brett from Alabama is recognized.
Thank you, Mr. Chairman.
God
Chair Powell,
damn,
thank you for
dude.
being with us today. My colleague from Maryland actually just touched on something, but as I was listening to the exchange from my colleague from Massachusetts and her closing
Okay.
remarks,
So
particularly
like in
about
2 minutes,
Dodd-Frank and
actually, I need to go
956,
and see.
there was also a comment at the end where she mentioned you working for giant banks versus the American people. Now, I have a long list of questions I want to talk to you about, but I did want to get you to respond to that.
Yeah, that's completely untrue. You know, the things that we're doing are consistent with our international obligations, and they're meant to be the best thing for the American economy, and that's really our only consideration. We have policy differences across various things, but you know, we're all trying to achieve the best results we can for the people that we serve.
Absolutely, thank you. Chair Powell, I have repeatedly talked about my concern with long-term debt and just think that it has not been well thought through. First, I have concerns that it blatantly
I mean, there's a lot of buying here.
requirement, and on that
It's just
note,
that the bears are definitely trying to sell this thing down.
that 2155
But there's definitely a lot of
will be
buying here
applicable to the long-term debt
in this area.
I think it
We got
applies to
this,
everything.
and then we got
on
this
the
higher
long-term debt
high.
requirement.
So I
you
mean,
know,
there's
we have,
buying here.
voluminous comments that
It's just that the momentum right now is
looking
bearish.
at carefully and
The CVD
thinking
is
through the process
negative
of what to do
right
about
now.
No, I appreciate that
on
because I
Bookmap.
do believe that currently it lacks a real cost benefit analysis. And I think it really does need serious reconsideration. And additionally, when you take a look at it and its overlapping nature with Basel III, it seems inappropriate that we would move forward with a new long-term debt proposal.
Okay, guys,
finalizing
I need to
that
go
rule
to this
when
meeting
we
real
don't
quick.
even really
Hopefully, when I leave, the market
what,
doesn't feel the need to come down to
Basel
my
III is going to
stop
mean for capital
and stop me out.
requirements for banks and obviously financial institutions. So my question for you is just that. Would it be inappropriate to move forward with the long-term debt proposal, finalizing that rule prior to Basel III being finalized as well?
I don't know that I would give you, I can't give you a clear answer on that. It will depend. I mean, Basel III won't be finalized for some time, but that's not to say we wouldn't reach a place where people understand and accept and support what it is that we're doing. And then I think at that point, we could certainly move forward with other rules.
I heard you mention to one of my other colleagues that probably by the time this all took place, it would be the beginning of next year. I would just say my concern, the Fed has said that the long-term debt rule will directly be impacted by the final Basel product. And so, you know, why would it be inappropriate or appropriate to move forward with that before banks can fully understand what they're facing from Basel? So I would just ask that y'all are thoughtful about that. These are a lot of things that people are dealing with and trying to really understand the implications of. And I think we have seen consistently that people are not taking a look at the cumulative impact of these things and not really taking a look at the trickle-down effect. And on that, on Basel, when you testified in March, you said the Fed was aware and fully considering the potential impacts of a proposal on our commodities markets. And I do want to talk about that. The commodities market, our agriculture industry is 1 in 5 jobs in the state of Alabama. It's 20% of our economy. I am a big believer food security is national security, and the proposal would increase hedging costs by 80%. Meaning banks would be far less likely or inclined to offer clearing services. So this could have a detrimental effect to our agriculture community and increase other costs providing food and fiber for our nation. When you look at inputs such as feed, seed, fertilizer prices, those have skyrocketed and prices have ended up just getting passed down to the consumer. I mean, grocery prices are up 21% since January. So do you believe that the revised Basel proposal will alleviate these concerns that our farmers and our ag community have had about Basel III? And has the Fed done anything specifically to take a look at this? And if not, will you commit to doing so?
So I don't want to get into the specific changes that we're going to make. I'll just say that we're very well aware of and very focused on that particular set of changes and, you know, paying close attention to the issues you've raised.
I appreciate that. And I also hope that the Fed when you craft these types of regulation, you really consider the relationship between the economic impact and the ability of community banks to serve their communities as well. I have heard you mention that to another one of my colleagues, so I know that you're committed to doing that, but that is incredibly important to Alabamians and our main streets all across the state. In my last few seconds, I want to touch on one more topic. So finding solutions to expanding affordable childcare is a top priority of mine, and it is something that I know a number of my colleagues on the other side of the aisle share an interest in and believe is an important issue as well. So Chair Powell, do you believe that increasing access to affordable childcare would positively impact labor participation in our country?
I do believe that.
Thank you.
Stowe of Nevada is recognized.
Thank you. Excuse me, Chairman Powell, thank you for joining us. And I always appreciate visiting with you in my office as well, and your comments. Let me start by a comment you made in the opening. Over the past 2 years, you said the economy has made considerable progress toward the Federal Reserve's 2% inflation goal. Labor market conditions have cooled while remaining strong. Reflecting these developments, the risks to achieving our employment and inflation goals are coming into better balance. And what we know is that since Biden came into office, the United States has added over 15 million jobs. Under President Biden, we had 41 consecutive months of job growth. And you've just said it again here today, that wages are up as well. Average U.S. wages and salaries grew by nearly, 16,700 between January 2021 and April 2024. So would you agree with a statement by a ranking member earlier today that the U.S. has the greatest economy on the planet?
I certainly would.
Let me ask you this. Jumping around, and there's been talks today about the Fed's independence and how important the Fed's independence is. The Wall Street Journal recently reported former Trump administration officials drafted policy options to weaken the independence of the Federal Reserve if President Trump were to be elected in November. Allegedly, former administration officials discussed policy options to erode the Fed's independence to make it easier for a president to impact interest rate decisions or fire the Fed chair at will. Chairman Powell, how important is it that the Fed has independence to provide economic stability and anchor our inflation expectations?
So I think it's actually essential. It's literally essential. And the good news is I think that's pretty broadly understood, and particularly on Capitol Hill, on both sides of the aisle. I believe that people do understand that we need to do our work in a way that's outside the political process to the maximum extent possible. Of course, we need to be accountable and tremendously transparent. If you look at the box in the Monetary Policy Report on central bank independence, it's really a box about transparency. That's the other side. So I think it's really important. I think it's an institutional arrangement that has served the public well. And, and I do believe that there's pretty wide support for it.
And you just said that it has been intentional and institutional arrangement over the years for this very reason. Correct?
Yes, this is a choice that we make, and I think it's countries around the world, advanced economies have all made this choice effectively, and the results are clear that you now have independent central banks, and you have better anchored inflation expectations, and you have better performance on inflation and better performance in the economy generally, which isn't to say there won't be shocks and crises and that kind of thing.
And then let me touch on a subject that one of my colleagues just talked about, because I was going to ask about this, which is our immigration. In Nevada, immigrants are extremely important for our economy. They're essential workers, doctors, nurses, and teachers in my community. Can you, without getting into other ancillary issues that don't impact what you do, can you talk about and elaborate on how immigration affects the employment rate and why you look at it and for what reason you look at the immigration issue?
So we don't, as you, just to make the point that you made, we don't take a position, we don't comment on immigration policy. We have no responsibility for it. It's not our job. But so we just look at the numbers and we sort of try to assess the economic consequences of immigration. And over the last 2 years, 2 years ago, we had an economy where we really had a labor shortage. And what's happened is we've had a wave of immigration, and many of those people have gone to work and gone to work legally through the asylum process. Not all of them. There's also a group that has not been legally processed, but many of this latest group have been have sought asylum and then gone through the process of getting a work permit. So what that means is that employers wanted workers, and there were more job openings than there were people actively seeking work or working. And so now you have a new supply of workers and they've filled those jobs. So we have a bigger economy, but it's not a tighter economy because labor supply has increased the economic capacity. That's just the arithmetic. That's not saying it's a good thing or a bad thing. There are
And
other
so-
policy choices that could be made, and they're not for us to make.
When you say greater economy,
A larger economy.
in other words, it has improved the growth of our economy.
Right, the economy grew 3.4%, I believe, last year. And some part of that was that, as Congressional Budget Office analysis showed, and to many
All right, so at least we got that first. At least we got some of these targets out of the way, man.
Uncounted group of
At least we got
workers
that.
coming into the country who would go into work. And that's part of the story of
Yeah, I
how
was
the
like, dude, what the
economy
hell's
managed to
going
grow
on? Okay.
that much while inflation
So at least
was
we
coming
got
down
some of it
pretty
out of the way.
sharply. Inflation came down 2 full percentage points during
Man.
2023.
All
while the
these
economy
targets
was
going to have to
growing
get hit
3.4%.
at this
So-
point.
and more of these people are coming in. So that
At
is
this
part of
point,
the
all my
explanation
targets gotta
for
get hit.
why we had such an interesting and pretty good year in 2023.
Thank you.
So if I turn this chart trader
Senator
off,
Kramer of North Dakota is recognized.
Hi, Mr. Chairman. Thank you.
all right. So
Chairman.
let me turn this off. Really.
As always, all of my prep goes out the window with the last question. So on the legal immigration workforce front, and I know this isn't your bailiwick, but the issue of workforce is important to the economy. I would submit
Obviously,
to
I'm
my
biased to the
colleagues,
upside, but
beyond
given
even
an unbiased
the people who come
opinion,
here seeking asylum
I
suddenly being
do
available
expect for the
workforce,
market to at
we have
least
1
get
million
back up
plus people
here
who we welcome in
to the bottom of
legally
this
every year,
range that I see.
the vast majority of whom don't come in with
That's
a job
actually what I
or
really
even a skill set
think the
we
market
have
is
so much
trying
work
to do
colleagues on
to
the
at least get back
legal
to this
immigration
range.
front to
VWAP is
create,
literally right here at the
a
bottom of
connection
this range
between
right here.
economic demands for workers
So
and the skill
I'm pretty
set and
sure we
education
can get
that
price to
our
trade
immigrants
into this.
bring to us. So
What's going to be the
most
deciding
every other
factor?
country requires some sort of skill
Turn this
set
down.
useful in the economy. We don't do much of that. So that's just my speech for the moment. I
So
know,
what's going to
Mr.
be the
Chairman, you've got
deciding
already
factor on
lots of
this
very
is
specific questions,
once
and I've heard a
price
couple of
gets
them
into
on
this
Basel
area,
III. So I'm
are
just
there
going
going to
make
be enough bears here
an illustration, and you can
to knock
comment
this
on it if
down?
you'd like.
Which is highly
but
unlikely,
there's
obviously.
a large generation
But
and
with this
transmission
massive move
utility in North
down,
Dakota,
with this
rural
trend
electric cooperative,
going
Basecamp
down,
Electric, very large G&T, members all over the upper Midwest. And they recently
anything is
testified
possible.
in front of
But
the
I
CFTC
believe for the most
on
part,
Basel III, and they expressed a
this
concern
move down was probably
about,
basically
how
a bunch of bulls
operations
getting
would be
stopped
impacted
out.
if lending was
If I'm going to be
curtailed or
completely
limited in any
honest, I
way.
think this was a
And they
bunch of
gave a
bulls
real
getting
world
stopped
example,
out,
and I wanna,
chasing this
just
move higher.
give you that example. Now, remember, this is an electricity supply that we're talking about.
And we found
It's
support.
critical it remains reliable. It's
We
critical
found
that
support
it
right
remains
here.
affordable. And part of an electric cooperative's risk management program, of course, is
So we
how it
found
buys
support
the
in this
fuel that
area.
generates the electricity. In this case, natural gas.
But the only thing that's concerning is obviously going to be the top of this trend line right here, where you can see that bears are trying to short it.
They can hedge
However,
by buying it at a fixed price.
we're making lower lows on the way
And
down.
it protects the cooperative
So
financially.
we're
since
definitely going to need a
electricity
break of this
prices,
trend
again,
line.
follow those spot
The bulls are definitely going to need to come
So
back
spot
here
prices
in at this
spike,
trend
so
line or
do
somewhere
electricity
close.
prices. However, with
And
a
we can see a
natural
move
gas
like
hedge,
that.
the
If
cooperative
we don't
can
see
generate
that,
electricity at a lower
we can
fixed
definitely
fuel
see
cost,
that,
protecting
which, like I
itself
said,
and
is
its
highly
consumers
unlikely, but we
from
just
high
got to be
prices.
prepared
It's
for
an
what price
upfront
could do.
cost on the balance sheet between
And
the
price could
cooperative and
definitely
its
do that
bank,
after
but it protects the reliability.
people are,
and
because I'm pretty sure people's going to
supply of
take profits
electricity.
here.
I give you
Here
that
at
very
VWAP,
specific
I
example,
can probably bet that
not
people's
even
going to be
mention
taking
that the
profits here.
cooperative model itself has some
Shit, I think
unique
I'm going to take profits here
qualities
at that
about it.
level.
If you would like to comment on it, you've already stated.
Yeah,
that
I'm taking
there are
profits
gonna
at
have to be
VWAP,
changes.
so
I just throw that into your box of things to think about, and you're welcome to comment if you'd like.
I'll just say we're well aware of that issue, and I appreciate you bringing it up.
Thank you, Mr. Chairman. With that, then, I'm just going to speak to this independence issue. I think that the senators that have questioned you on it are correct. I share that concern, as you know, that the independence of the Fed is essential. I have resisted moves within my own party to change it, but those moves are very narrow and not very, I don't think, very
I think if
realistic.
Powell can
And
get
I
done
appreciate you
speaking,
pointing out that
we can
from what you
possibly
tell, at least
see.
on Capitol
Let's see,
Hill, we're all
I'll put
pretty
something like
much united on that
818.
front.
I'm
Perception
pretty
does
sure we can
matter.
get to
It matters a great deal. And you and I
845,
have
probably
had discussions over
843.
the years on
We can get
you were
here
very,
if Powell gets done speaking
you
and the
admonished us
market just
strongly as
straight up
Congress to
pumps.
spend what we
I mean,
needed to
this is a
spend to get
deep
through
enough
the
pullback
pandemic
for
and
that.
maintain the economy. I think you were right to do that. You were just as aggressive in not responding to calls to rein it in a little bit when Democrats brought the Inflation Reduction Act and the American Rescue Plan to the forefront, and I think really basically hijacked the economy and put fuel on inflation. But perception matters, and so I would just submit to you.
Looks
and
like
you
they
haven't
are
said
trying
you're
to
going to
sell
do
it
this.
off
I
as
don't have any
200
reason to
EMA
believe you'll do
right
this,
here.
but any move to lower interest rates or move interest rates either direction before November 5th could certainly be a bad perception, even if there's a strong push to do that. I know you understand that, but I just want you to know that as long as you remain independent, I'll be on your side. I think neutral is a good place to be. And by the way, you have one of those jobs where being boring is one of the most noble things you can be. So great job. Thank
you. We do our
Thank you,
best.
Senator Kramer. Senator Warnock is recognized, who is decidedly not boring.
Thank you very much, Mr. Chairman. The latest monetary policy report shows inflation is in housing costs is gradually easing. That's good news. But many Georgians still feel the sting of unaffordable homes and mortgages. And one reason for this, you and I have discussed this, is that we aren't building enough houses. 2022 study published in the Journal of Economic Geography found that for every 10% increase in the housing stock, rents decreased by 1%. We've discussed this issue, particularly the effects of housing supply on housing costs. And we agreed that while the Federal Reserve does not control housing supply, it can help create the environment that encourages the construction of new housing, particularly affordable housing. Chair Powell, how has the Fed
I'm not playing that
working
game.
to foster an environment that encourages home construction, and what, in your view, are the challenges that remain?
So, I mean, in the long run, the absolute best thing we can do for the housing market and for the economy is to sustainably bring inflation back down so that people aren't talking about it anymore. And it's just assumed by everybody in their daily lives that inflation will be around 2%. So we don't need to talk about it, which is where we were for a long time. We want to get back to that. Interest rates can come down then, and the housing market can return to the state it was in before the pandemic, which was to say really tight. We don't have enough housing, and that's not really a monetary policy issue. In the short term, though, I would say tight monetary policy weighs on the housing market. The policy works through interest-sensitive spending, and housing is definitely at the top of the list of interest-sensitive spending. So we understand that we're suppressing, not suppressing, but our
Okay,
our
I can
higher
live
interest
with
rates.
that. I can live with
Have
that.
led
I can live with
to
that
lower
because I'm
housing
pretty sure that
starts
people are going
and
to take
lower
profits
activity
here.
in the housing market. But we're doing that to
Even
get
if
back
I
to
do
2%
I can scale
inflation
back into
for the whole
this
economy,
with some
so
more.
that the housing market can be on a better foundation.
Well, yeah, and related to
Okay.
that, when you have these high interest rates, of course, you see across the country, but particularly in a state like Georgia,
Okay.
these institutional investors who are coming into the space and they're buying houses in all cash, boxing out first generation home buyers. And of course, the conditions for them doing that improve to their favor with higher interest rates. Would you agree with that assessment?
I know some of that's happening. I don't know that higher interest rates make it. I mean, some of that's, they're working with.
When you got higher interest rates and you got institutional buyers who can purchase it all cash, doesn't that further?
But they have to borrow the money at higher interest rates. I'm just saying higher interest rates doesn't make their investment any cheaper. And notwithstanding, I understand it's a sensitive issue, and in most markets, it's still a pretty small portion of the outstanding housing stock. But it's not an issue. It's not an issue for us. They're a legal buyer of housing. Our job is really the whole economy. I mean, it's more of a question for legislatures.
So how can the Fed better deploy its monetary tools to ensure that we are meeting key inflation objectives like housing affordability?
Again, that's not his
think
part.
the best thing we can do is to is kind of what we think we've been doing, which is to move carefully as we think about loosening policy and make sure that once that we do that, when we've got greater confidence that inflation is moving sustainably down toward 2%, we're also keeping a close eye on the labor market, and if we see unexpected weakening there, then we could respond to that too. But that's really the best thing we can do for the whole economy, and very specifically for the housing market too.
You well point out that you're limited in terms of your influence there, and there is a role for Congress to be sure, which is one of the reasons I wanted to be on this committee to introduce a down payment toward Equity Act with my colleague Senator Butler. This bill would help first-generation home buyers compete with Wall Street institutional investors by helping with down payment costs, closing costs, and costs to reduce interest rates. I look forward to continuing productive conversations with you and looking at how we can make housing more affordable for all Americans. I'm running out of time here, but one of the other concerns that I maintain is with respect to reducing the racial wealth gap. Is this issue around home appraisals. And the Fed is part of the interagency task force on property appraisal and valuation equity. What expertise and perspective has the Fed brought to this task force? How are you responding to this issue of home appraisals?
So, as you know, we've been an active participant in that task force, and we bring all of the expertise we have in the housing market, as well as regulatory, supervisory, and economic expertise generally, as we look at that. And I'll also say that our strongly held view is that discrimination has no place in the banking system, and that includes appraisals and other valuations.
I agree with that, and quickly, I was glad to see that CFPB and other agencies recently finalized a rule that creates strong anti-discrimination standards for automated home evaluations. The Fed has not yet approved this rule. Why not, and does the Fed plan to do so?
Sorry, why do we?
You've not yet approved the rule that was made, that was suggested by the CFPB. They finalized the rule.
But do we? Sorry. I'm not aware that it's a rule that we have to finalize too. Is that the case?
That is my understanding.
Let me follow up with you on that. I'm not aware of that.
Okay.
Thank you.
Senator Dennis Gaines of Montana is recognized.
Chairman, thank you. Chairman Powell, thanks for being here today. Certainly, it's not lost on anybody here. Election season's in full swing. And so from now until Election Day, my Democratic colleagues in Congress, as well as
it would be nice if they hurried the hell
Harris
up.
administration, will waste no time attempting to sell a fairy tale to the American people that financially and economically, they are better off now than they were almost 4 years ago. When President Biden took office, inflation was at 1.4%. His failed policies drove us to the highest inflation we've seen in 40 years. I can tell you the folks back home in Montana aren't fooled, because in every part of their lives, inflation is not some kind of hypothetical. They see the everyday impacts of the decades-high inflation brought on by the policies of the Biden administration and facilitated by congressional Democrats. The cost of most goods and services across the economy are more expensive than they were in 2020, and that is a fact that no amount of political spin or mental gymnastics can make go away. Here's just a couple of examples. Breakfast cereal. Prices have increased 28% since January of 2020. Gas prices increased 36% from a national average of $2.63 a gallon to $3.58. $3.58 per gallon.
This shit is bouncing off them golden
prices
fizz.
have jumped $3 per dozen in 2024, double the cost of $1.45 in February of 2020.
So this is Friday's. So we'll see if the market's going to respect this one.
President Biden and Senate Democrats are celebrating a victory lap in light of the recent jobs report showing a 206,000 new jobs last month. They're willfully ignoring the fact that more than a third of these job gains came from the government sector. Mr. Chairman, I commend you for the job you have done thus far in trying to rein in inflation. I encourage you to continue the fight despite the political pressures you may face. I'm also encouraged by the comments you made earlier this month about the dire need for Washington to address its fiscal imbalance. I couldn't agree more. I've said many times and continue to believe that Washington's
crazy.
culture of reckless spending, of excessive
Okay.
borrowing is leading us down a very dangerous path by leaving future generations with mountains of debt. And I'm happy to hear you agree with that assessment. Mr. Chairman, given that it's an election year, you're undoubtedly facing immense political pressure to lower rates. Thus far, you've done an admirable job in using the tools at your disposal to fight inflation, and I urge you to continue to be led by
Man,
data
get off your knees, bro.
and not
Get off your
calendars or
knees.
political influence.
Get off your
You
knees,
said
bro.
as recently as last week that while things are trending in the right direction, you would need to see further evidence before cutting rates. So here's my question, Mr. Chairman. What specifically are you looking at and looking for as we head into the next FOMC meeting, and how do you factor in this recent labor data, and certainly the significant part of that being government jobs?
So we're looking for two things, really. One is just more good inflation data. And we had quite a lot of good inflation data the last 7 months of last year. Then we had kind of a bump in inflation in the first quarter. And now we've had one good and one very good inflation reading. And we need more good data so that we can be confident that what we're seeing is really, that's where inflation's going. I would say going back down toward 2%. We don't need to
Actually,
see
let's
that
look at gold real
2%.
quick.
Right now we're
I was actually thinking about
2.6%.
taking this long,
So
but
that's on
I didn't want to
inflation.
deal with this,
On the
honestly.
labor market,
I didn't
to
want to
your
deal with it.
question,
Yeah, I think you're right,
we've
Gangway.
seen that the labor market has cooled really significantly.
Yeah, that's the bulls about to launch this damn thing.
Across so many measures. And
That's
a number
definitely
of,
them about to
people
launch
here
it.
today have pointed them out. But
Probably gonna
and
break
the
this
unemployment
high.
rate has moved up. You see a labor market that is now pretty much in balance, pretty much where it was in 2019. It's not a source of broad inflationary
Yeah,
pressures for
they
the
bounced it at
economy now.
the
But it's
right
still
here
a
on the
strong
ES
labor
as
market.
well.
You know,
Yeah, I think
4.1%
about to
unemployment is a
get
very
much higher,
good
baby.
and historically low unemployment rate. So we have a mandate to support maximum
Got the
employment.
hourly chart.
And we
Yeah,
also are
the
paying
hourly
close
chart
attention.
is definitely
and if
bullish. You can see
the
that
labor market
we
were
now broke
weakening
over
unexpectedly, which
the
is to
previous
say,
candles
more
close
than what we've seen in a
and
material way, if
open.
we unexpectedly,
So,
then we
and we
can
still got
also
48
respond
minutes
to
in this
that because
candle.
we
So I
have a
think the
dual
bulls got
mandate,
it
and
for
we
at
now
least right
see
now.
the two
Our next
mandates as more
objective
in
is getting
balance
over
than they were
VWAP.
a year
And once
ago.
we get over
Really, the
VWAP,
focus had to be and was on
I guess the
inflation.
next stop will
Now
be
we
here
need to
at
be focusing on
34
both goals.
at the bottom of this range.
Chairman, thank you. I want to get one question on Basel III, and then we will.
And then
In
I think we can
March,
get much
this
higher.
committee agreed that it was seriously flawed and need to be completely rewritten. I was encouraged to see reports last month that the Federal Reserve had provided other financial regulations with possible changes to the proposal. My question is, I continue to believe the proposal should be scrapped altogether, but could you share what changes you're planning to make and the status of the ongoing development of the updated proposal?
So we've had extensive discussions led by Vice Chair for Supervision Barr with the FDIC and the OCC. We made a lot of progress in getting close to an agreement on a set of proposed changes. What the work that remains is to agree on a process forward. How are we going to move forward? It is our view institutionally that we need to put the changes out for comment for some period of time so that the public, all members of the public who want to comment, can see them again and comment on them again and see them in the context of the quantitative impact survey that we did. And that's the right way to proceed. That's how we would ordinarily proceed, and we don't see why we would deviate from that. And this is the conversation we're now having with the leadership of the FDIC and the OCC. And my hope is that we'll be able to come together around a way to proceed forward, very soon. I'd hope we would have done so by now, but I believe we will do so fairly soon.
Thank you for joining us today, Chair Powell. I look forward to working with you to
Thank
strengthen
you.
this
Thank you.
economy.
Can we
For
get much
senators who wish
higher,
to submit
baby?
Questions for the hearing record.
Can we
They're due
get
1
much
week from
higher?
today, July
We all know they're
16th.
gonna pump it.
To Chair Powell, please submit your responses to questions for the record 45 days, no more than 45 days from the day you receive them. Thank you for your testimony. The committee's adjourned.
Thank you. God damn. All right, man. All right. Can we get much higher now? Can we get much higher? Can we get much higher? All right. Or are they gonna try to dump it here? They're gonna try to dump it here. I'm gonna take 2 off here just in case. Yeah, they're gonna probably try to dump it to pump it. All right. All right, so right now, I mean, I did make it back. I'm down 2K or 2,500. 2,500. If I can get a good re-entry long, I can definitely get that back. But it's just going to have to find the correct area to get in long. That's what's going to be is finding the correct entry to get in long. No. Hmm. Hmm. All right, so let's see if they can try to find support here. If not, okay. Stupid, but what the fuck do I know? Hmm. Yeah, I think we can get higher, man. The way that this is looking, I think we can get higher. That's your hit song? Yeah, I think we can get much higher, baby. Hmm. Yeah, the Bulls just need to really take over. I mean, we got the dip. The Bears finally got the Bears finally got their dip. I would find it surprising if the Bears take back over after all of that. So the question is, are we going to get that power pump now that he's done talking? At this point, I can definitely reduce some of my risk on this. All right, man. After we get this first target hit, I'm gonna let this thing ride the entire day. I'm letting it ride. All right. Yeah, I think I'm good on that. I think I'm good. All right, man. So, I mean, the day started out great, man. Today started out great. No losing trades at all. Um, and then I made a mistake. The reason why I went tilt in this account is because obviously I can over leverage and pass this account, but that's just not the point of this account. This point is to build up consistency and coming in day by day. And I've been kind of back and forth with this account. And yeah, I did not mean to take that trade in this account. I meant to take the trade in the account specifically for trades like that. And once I noticed that I clicked on the wrong account, which it says self-sabotage crap, yeah, I just went tilt after that. Okay, mistakes I made. What did I do right today? What did I do right? I did close out initially. So I hit my daily target for the day and I closed the account. That's what I did right today. Obviously, once I realized the mistake I made, I did go tilt. I mean, that was obvious. When I get into that mode, I guess what yellow Sherm, it's either I'm blowing the account or I'm getting my money back. Like I said before, this account I've been practicing consistency in this account, and walking away from the computer is already hard within itself, especially when you can see that the market is still going to go in the direction that you intend for it to go. And looking at the charts and say, hey, man, if I stayed in the account, I could have passed it. I mean, I can pass the account. That's not the point of this exercise that I'm doing with myself. I want to be able to show consistency and that we can come in every day, do the same thing every day, make the same amount of money, and at the end of the week, we can get a payout. So yeah, that mistake got in the way of that, and I just went to on that. It's not my proudest moment, but hey, it happened. It happened. What should I improve on? Honestly, like I said, I don't think I have anything to improve on because when I go tilt, it's hard to kind of pull yourself out of that mindset. That's why I have things that prevents me from getting to that point in the first place. Hmm. Hmm. Yeah, I think no, I think I should keep my stop down here. I'll put that down here. There might be some back and forth, but the way that the bulls are looking, these highs might get ran. This does look like the bears are trying to reverse this back down, but with all this bullishness, I think the bears are about to get their stops ran. And I think we can test up into these higher areas. So if not, then I'm willing to limit into this area right here. Probably put this up a little bit more, probably like at 80, 150, like yeah, right there. If price does for some reason gets down there. But I guess for the most part, it might actually try to get to 88. I mean, we saw the bounce at 88 already. We saw this bounce right here. Okay. No, that's not it. Isn't that interesting? Okay. All right. So, what should I improve on? Uh, hmm. Uh, I mean, I can't say nothing about going tilt because I mean that's. So what should I improve on? Because I mean all that thing. I guess I mean. I mean, what can I really say to that? What can I really say? What can I really say to that? Just be more mindful, I guess. Yeah, actually, I did go long there. I was able to get a lot of my money back because of that long. I think I see another opportunity to go long here. We'll see though. We'll see. I think this may be another opportunity to go long or to add into this position. You know what? Hmm. Hmm. Actually, no. What I should do is just in case. Like I said, I think the market is definitely on its way for a pump. It's definitely we're definitely definitely due for a pump. The question is, how low will the bears will go? And like I said, dude, like that'd be completely crazy if the bears just out of nowhere just come. Okay, so I guess what I'll do with this position. Put it underneath this low. All right, so like I said, probably stay on for a couple of more minutes. Hold on, give me a second real quick. Give me a second. All right, so what I guess what I will do with this is actually just put it like a couple of ticks underneath this candle. I don't want to put that much risk on this because they may try to come back all the way down here. Because they are holding off this area so far. And so yeah, so I'll just put this maybe 94. Yeah, about right here. Yeah, I'll put it right there. They may be trying to come back down here, and this will be like the last line of defense right here. Says look at YM. Yeah, like what, dude, what the hell? God damn. I guess if I wanted to go long, I should have went YM. Damn. Yo, what's going on with this? I should have went YM if I wanted to go long. But all right, guys, I'm just gonna let this position ride. This is my position. I know the charts look absolutely crazy right now, and believe me, this is definitely crazy. Definitely crazy. Crazy day trying to recover. 88. Nah, I can't do that. Can't do that. Can't get scared. If I get stopped out, I get stopped out. If I get stopped out of this one, I am willing to scale into this position here. And I've already reduced a lot of my risk on this position. Honestly, what I should do actually is maybe reduce it a little bit more. That's how you make your money gain weight. Contrarians make all the money. People are fearful, that's when you buy. When people are greedy, that's when you sell. Simple. But all right, guys. All right, we'll do this again tomorrow. Yeah, I got to get to work. So with that said, peace out.